Alright, good morning, good morning.
5 minutes ago, typically EI crude oil inventories forecast a draw of 1.5 million. Prior was a draw of 7.167 million. Gasoline inventories look for a draw of 1.45 million. Prior was a build of 0.007 million. And distillate inventories forecast for a build of 0.419 million. Prior was a build of 1.062 million. Crude Cushing inventories prior was a draw of 0.771 million.
Pretty clear balance. I'm not going to be incredibly bullish until we can step over these highs and hold them. ES, RTY very flat, NQ leading a bit more down. But both profiles pretty clearly D's. Single distributions, holding value of previous day. We hit our half of our gap on NQ. So to me it just looks like balance, fading edges on either side right now while we wait. Waiting for NQ to find a low. With RTY and ES flat. Probably, I mean, it could potentially worth to, I'm keeping an eye on this 30 here on NQ. For a potential higher low. They're trying to bid it. Push up to 70 or 80, maybe, if we can hold here. Get trapped liquidity into that bottom there.
Nvidia shares hitting highest in over 2 months, last up 4.3%. One minute ago now, I'll lead with the EI crude oil. I'll lead with the EI crude oil inventories.
Okay, let's see what they do here. Still holding where I want us to.
Back rabbit from Israel's Channel 12 News in regards to the U.S. decision to lift sanctions on Iran says the U.S. decision to lift sanctions is not related to Iran, but rather to Iraq. Ten seconds.
News coming out here soon.
build of 2.479 million, a build of 2.479 million, compared to the expected draw of 1.5 million. Gasoline inventories, a draw of 1.643 million, a draw of 1.643 million, compared to the expected draw of 1.45 million. Distillate inventories, a draw of 3.473 million, a draw of 3.473 million, compared to the expected build of 0.419 million. In crude cushioning inventories, a build of 2.356 million. We have posted out the report and feed as well.
Let's see what happens. Give this a second still. Russell still flat. Nothing for me. Short wise. Won't take it. Just watch to see if we fade again or if this will hold. Should get a bounce here. This is yesterday's POC. And RTY is still holding. And yes, at our edge where we faded before. So just watch to see what they do into this. I expect a bounce. And then either like an offer and then continuation, or a bid and then rotation. Buyer getting absorbed into 70s. Needs to sweep 50, and then we get next leg down to 800. If we can hold here. If not, we will trap this liquidity at 70, and we will look for a bid over 900 for rotations back. So it's really important that sell side shows itself here if it's going to do another leg down as we push into this guy. If we get back above 900, I think we rotate back up for the reversion trade. If we're able to hold and trap here, then I'm expecting another 50 points to the downside on NQ. So it is really dependent to see if offer can step down and take in size here. Or I just expect reversion like I was talking about before. So this is the bid at 800s. They're absorbing into 800 right now. It's the same thing. So 900s on NQ is your flip point. 800s on ES is your flip point. Where if we can bid above that, then I would expect reversion back up. If we can hold here, then we're going to be looking for a secondary sell, and that'll lead for another like 50 to 60 points to the downside on NQ. Watching now. Again, the reason why we believe this is because Russell is flat at our 30-second opening range, so we don't have full market participation for downside rotation. So we want to be very careful because we understand that this is still holding. And we can see that this buyer is now holding, and we're back into our seller here on our footprint candle. Same thing here on NQ, all right, on ES, right? Big buying participation into these highs. So if we're going to hold, it's going to be at this ledge here at this 900 where all of these sellers are. We need to then get back below, right, to then show that there's interest. Same thing here in ES where we would then trap these guys. So just watching our reactions here again at 900 on NQ and 800 on ES. 40 points so far on NQ from our 900, 5 points so far, almost 6 on ES from our 800. See if we can flip these lows. We need to get below 70 and sweep, or this is just a rotational trade on NQ. ES leading down. We would love to see 95s flip if we're going to continue. It's very important. We had our absorption at our highs where we expected, but we need to see sellers now willing to defend the lows, which we're not doing yet. The way that we get speed here is that these guys then on ES are trapped above 800, and these guys on NQ are going to be then trapped below, or sorry, above 900 as well. All right, let's see what they do here. Bid at 50. Again, I'd like to see us push down to our battle line. I'm looking for that 800 if we can hold and flip. Same thing here at this 95. If we can hold this, we go down to 86.
Nasdaq 100 turning negative, S&P 500 pairing gains to 0.4%.
We are in a short JD. You either got in at 800 or at 95s on rejection, 900s or 870s. Both are very profitable. I'm looking for a leg down to 800 ideally, or 786 on ES for our final rotation. Just took off my first size here. Looking for full fill, ideally. They're trying to take in size at 94.
Netanyahu just says Trump is a great friend of ours, and we appreciate the effort against Iran's aspirations, but the existence of Israel is not negotiable. It's according to Israel News.
See what they do here. Minute left until new 15s. Absorption into 860, 870 currently on NQ, and 794, 96 on ES for the lower high. Battle right now going on for that. We're watching to see if they can hold these secondary cells for that last leg, or if we need to come back up to our main supply. $20 seconds. New 15s have opened below POC of previous candle, but within our value lows of previous candles. So very tight range. Need to sweep below value low of our last 15s for continuation. We are holding where we need to though. Just need to see sell side below our previous 15 here, or we will continue to just chop while we wait for a side to figure themselves out. Looks like we're gonna have to come back up. Failure to get below value low previous candle. I'm not bullish on this. We still need to flip our big pivot, but we do need to trap liquidity. But again, from the failure to continue downwards. Just back up to our value high of our previous candle into our known seller off of the failure to get below our value low. Hopefully we offer here on Russell, and then we get our next leg. This 43 to 45 is what I'm looking for as our rejection point. Hopefully that gives us a bit of a loss of momentum here, and then we can keep going. And then we've trapped some sort of liquidity in this little look above, and then we can then sweep below for that last target. If we need to come all the way back up, it's whatever, it's the same thing, but I'd be less confident if we have to do that. But this goes up until Russell can lose momentum here. We just are looking for them to get trapped, and then we need to see them sweep that low, and then we're good. If they can't, then it just comes right back up, and it's a balanced trade. So right now, balanced trade here, back up to our previous absorption because Russell hasn't found that resistance, but it's still holding into our 43 to 45, looking for them to offer the same area here again in trap and then rotate down. Until we flip above this, I am still bearish here. There's no reason not to be. Watching to see what we do. Absorption still into this 900 and into our 800 on ES, no change. Immediate reaction back down off of that. 30 points on NQ, 5 points on ES. But we do need to flip these again if we're going to go down, or there's nothing here. Just balance between our 840 and our 900. So what you're watching for now is from this point, can we just do the exact same trade again where this holds, but we need to get below this 90 for more, or this is going to be a higher low instead of a lower high. Right, this is a lower high right now, a lower high right now. If this holds here and then we flip above this, then that's when we can shift. Right now, it's just a retest of our seller and our offer lowering, which is why I said I am not bullish with Russell holding where it is and with NQ just testing back into supply. And you can see we trapped that liquidity into those highs. We just need to now get below this low, and then we're off the races. Take your first risk off here again into our lows. No reason not to. Free money, really great rotation. You've now made 60 points playing off of our pivot on NQ. If we can flip our lows at 840 and make it offer, then we have another 40 points left for a 100-point rotation. So we'll see. This is our low here into 830.40. Took another one off there.
It's Kashkari says, my goal is not to slow the economy. The goal is 2% inflation.
I'm
This is
one on
Kashkari
ES,
speaking to CNBC
2 on
on,
NQ.
on Wednesday morning.
See if we can get this last leg. Russell leading, following our pathing.
It's now being put up by another major news wire here.
Out one more.
Headlines that have come out before at about 8 a.m. in the morning.
Okay, well, there you go. There's a huge amount of points. All you have to do is listen. And there's your last sweep into target. Battle line hit, 800, 100-point rotation, 0 drawdown. It's like almost $2,000 per contract from this rotation. Same thing with ES, 800, rotation down. Russell led. All you had to do is be patient and wait for the 430, sorry, the 43 to 45 offer for this continuation leg. Take some risk off if you want. Almost $1,000 here on ES as well, if you're playing off of 800s per contract. Yeah, I think that's a good place to close, or move stops down at least. Lower highs are still in place, so trend is still in play. Definitely could get some continuation potential, but this is a great target. Battle line is a very important level on NQ.
Pakistani source to Al Arabiya says Prime Minister Shahbaz Sharif and Army Chief Asim Munir are to visit Saudi Arabia tomorrow.
Immediate bid off our target on NQ at our 800s, back up to our 870 here. I mean, there's, yeah. The play played. Watching for a lower high. No change. Just a downtrend, right? But just a pretty reactive bounce off our level of interest. See if we absorb again and then continue, or if something flips. I don't know. We'll see. We just caught 100 points, so it is what it is. We'll leave a runner. See if downtrends continue to persist. If they do, then we just keep going. Again, we hit target, so pretty happy. We've captured 100 points on NQ and 20 points on ES in a single rotation. If I was not streaming, I would be done for the day. Just as like a understand of like where we are and like what we just did. I mean, capturing 20 points on ES is like a day's worth of trading. 100 points on NQ is like, okay, you did the thing. But we'll see what we do from here. Potentially more on the table. Just watching to see if right, we trap something into like here and then reoffer and can get below our battle line for more. Same thing, something similar on ES where we maybe do something like this. But unsure yet. We know that there are sellers into these lows that are so far taken, right? POC at the low, lots of selling pressure that was pushed down there. So until we can flip it, you can't really look for more downside. We know that we're just kind of like rotating in between. So for us to get more, we're going to need to see a pretty clear willingness to defend the value of our previous candle, which is here, right? And then that would show as a interest to then at least rotate like this. But
Iran's foreign ministry spokesperson says geographic characteristics of the region Strait was agreed by Iran and Oman.
Again, we went to my target. So now it's just a matter of retrapping, right? Reinitiating before we get our next leg. Russell held the low, rotating back
just
up.
Just keep an eye on oil prices. Just seeing a little bit of movement towards the downside off of the back of the headline there. Dixie, slight movement down. It's P500. Not really that much movement there now.
So if we're going to get a sell, I'd like to see it here, ideally, following our path, like I just showed across all of these.
Also, Iran's foreign ministry spokesperson, when talking about
to see it on order flow,
the Speaker of Parliament, Galabaf, traveling to Pakistan and Qatar at the end of this week, they said that we do not have any plans for travel to those nations. However, Pakistan and Qatar are continuing their efforts to de-escalate tensions, and Iran is in contact with them and exchanging views.
So there's a small trap right now potentially happening. You can see it on footprint here into our area of interest where we thought it might happen. But it's not.
Iran's foreign ministry spokesperson says joint announced by Oman and Iran are in final stage if certain third parties don't interfere.
Right, we can see them trying to buy into this pivot here and so far not being able to do much with it. We're going to keep an eye on this area on NQ and ES. we still need to look back below 40, just like last time, for anything to really matter. Wait for Russell to find that high, just like we did on the last initiation, and see if
Also
NQ and ES can
from
hold
the
here.
foreign ministry spokesperson, just repeating what's been said before by Iran this week, that the Iran-Oman agreement in itself can't guarantee the safety of the strait for passing ships, as the factors that destabilize Strait of Hormuz, particularly the US naval blockade and other aggressive and threatening actions against Iran and its interests, still exist.
So we want Russell to reject, we want NQ and ES to trap here, and then we need to flip below our pivots just like on the last leg for the continuation down. As soon as Russell's able to actually show that interest here again into this 43.45 and then push back below, that will be our initiative signal that this isn't just going to be a higher low, sideways chop before the next leg back up. We want to see them trap across and get below with full market participation. Again, you can see the trapped liquidity. I've highlighted on both. We predicted it. This pathing's been here now for this entire candle. We're now watching to see if we can get some more here. It's already initially a good short, right? 70 to 40. But if we can flip 40s, we get another leg. If they hold here, then it's just a higher low. So we need to see this show a bit of aggressive selling pressure below our pivots here. Same thing on ES, below 86 if we're going to go more. We want to see it re-offer instead of a rebid. Russell holding pretty well so far. Needs to show a bit more weakness, or again, it's just not going to be incredibly convincing for this next leg. I want to see a Russell below 40, ideally. So far, finding a buyer here at our 41. Needs to flip this 40.41 for more. Again, the NQ and ES trades are already profitable, but you have to be respectful that Russell is still maintaining. We will continue to chop here, and we will try to trap on either side of either this 40 or this 70 on NQ, and either side can win, especially if Russell's holding. Then we will
According
not be able to break
Michi
these
Stein,
lows
report of
successfully.
I-24 News, says a source on the Israeli negotiating team said that Ambassador later requested the US suspend talks about 3 hours before they were scheduled to conclude, following repeated selective leaks by the Lebanese delegation. The talks are expected to resume tomorrow.
Nice, Shadow. Good job, man. Big retest here on Russell. Needs to ideally show interest here on a lower high and then offer below this 40 for more. NQ currently battling with our 40. ES currently battling with our pivot here at 86. We are trying to trap this liquidity. Again, I've highlighted it, I've shown it. We need to push below. We need to see Russell reject here if we're going to at least come back down to these lows. It is so vital. If you are uncomfortable playing here, you can just wait for the flip of the battle line, and you'll be all right. RTY holding. NQ buyers are holding from R40, trying to push back into these highs again to retest. See if they're able to actually initiate or if that does nothing. Same thing on ES. We're just trying to capture size into this area, still maintain value in this downtrend overall, and then we need to sweep below this low for more. That's it. We need Russell follow through with that ideally. If we can't get that, right, then we're just going to rotate back up, just like last attempt, where we exhausted into our lows. Almost 1 billion shares of SpaceX held by employees and early investors become eligible to trade tomorrow. That's 43% more than the 638 million shares issued at IPO. SpaceX's free float is set to increase by 4.9% to 11.8% of outstanding shares. Yikes. That's all I got to say on that one. Another rejection on Russell into our 43 to 45, immediate participation to the downside. Still holding our pivot on NQ and ES, following our plan. Rotation back down to POC of our previous candle here on ES leading with Russell. NQ still needs to flip 40s and sweep. Without that, it is just the end of the rotation here from our 880s, right? So still 40 points, but we need the sweep below for that new leg down if we're going to trap here following pathing. We need Russell follow through. It needs to happen. Everything will probably happen in the next 30 seconds on the open of the new 15 if we're going to verify if this is going to continue to maintain. That would be my guess. New 15's opening right at our pivot here at POC of previous candle. You can see that trapped liquidity just like we talked about, but an inability to flip below 40s as of yet, which is just like we said. We need to see sell side sweep and step down at our 40 level on Russell. They're trying to make that low. Let's see if we can get this follow through. ES, no change. We trapped exactly where we thought we would. We are pushing back down into lows. This is a great first target into 780 for 10 points on ES. If we can flip this, then we've got another great leg down. Watching now at our 40s on NQ to see if we can get this follow through. Retesting. Let's see if they'll do the leg down into 800s. And then if we can flip that, then we're good to go to 750 for another 50 points. We'll see. Russell coming back down into our lows. I'd expect a slight bounce there. And this is, again, a great profit target as we push into our previous pivots. Watch Russell here into our low. See if we can flip it on first test or if we're going to need to do an offer and then continuation. Again, nothing has changed about our trend, right? We caught the bear. It rotated back up. You wait for Russell to lose momentum, and then it's good to go again. We get our pop down from our 40. I'm watching now to see if we need to do something like this or if we can just immediately go. That's your target again here on NQ. Take your risk off and then leave runners for continuation below on the flip of our 800. Here's our next leg on ES. And here are the trades. And here's the pathing that we were playing off of. That's been on screen the entire time. Okay, well, let's see if we get some follow through. Russell leading down. Let's see if we can flip our battle line at 800s for this next leg. Is there anyone here that doesn't understand the rotation and why we could expect what we did? Do you see, are you able to visualize the trapped liquidity here? That's the first question. Are you able to visualize it? Do you see that when Russell lost momentum into our known seller, that the rest of the market then followed through? Do you see those two things? Those are the most important things that you can visualize. Really nice sweep below. Let's see if we can hold it on retest. Out one more here on NQ, just in case we can't. And now I'm looking to see if we can reoffer. This is full follow through though. Testing now. Beautiful secondary trade. I mean, yep, huge. See if we get this next leg on a hold below our battle line. Russell, we want to see also follow through. Maybe a retest of our 75s on ES. Just following our pathing here. Again, are there any questions? Because if you can understand the setup and why I was looking for what I was looking for, then you're in a very good position. Do you see, can you visualize the trap? Do you see the overall direction that we're trading in on the day? Do you understand the bias? Or no? It's okay to say no. We can then go over it, but you have to let me know. Executing with limits versus marketing in. I usually only enter in with limits in balance, usually. I usually mark it in as long as we're pushing into an edge. That's really all I care about. So like I have a risk, right? And like that's where I'm looking to execute. So like for me, my execution, it doesn't like, my entry doesn't exactly matter because we haven't invalidated the overall structure that I'm trading within, right? So to me, it's like, what am I trying to do? And what am I trying to, I think that the psychological thing here is what's my goal? Is my goal to have the perfect entry, or is it to be in a position in the overall trend direction that I've kind of set for myself, right? So if I know that we're in a channel down, I am willing to enter, right, as we're pushing down if I see the order flow that I'm looking for, right? So what I'm looking for is for us to maintain, this is our pivot, right? This is where I saw absorption after a sweep to the downside. So to me, any entry that is coming into this is worthwhile. So I'm willing to look for offers as long as we're below our 800 pivot, because there's nothing else for me to do. If these guys are still willing to take in, I'm willing to push down for this continuation because I know the overall trend is to the downside, and I know that I might not get that exact entry that I want because I know that the offer is stepping down. So if I'm looking for a specific limit fill, I would have to put my limits into this 97,804 area, right, where we're seeing this absorption here, right? That's what that is. That's absorption. So once we've spotted that, you could try to set limits here and maybe you get filled here, right? But I'm looking for the initial reaction and then I'm just building a position because we know what our risk is, right? This is our invalidation. If this flips, then I have to flip my bias as well, right? Because this is where sell side is absorbing, right? These are aggressive market buys that are being absorbed by a passive seller into this area. That's what this is representing, these blue dots. And we are below VWAP. So I now have like a very clear invalidation of why and where I'm looking. And it's not just ES, right? This is our 900 on NQ, and it's also Russell starting to do that downtrend as well. So this whole area can be where you're looking for limits. But for me, like, I'm just building this position below this absorption and below our VWAP because we know the overall trend, right? So I can just take in size here, and I'm willing to do that because I know what my max risk is for this trade, right? So what you're doing is you're building around your max risk. If you know that this is your invalidation area and you know that we're in a trend, the only thing that you're considering right now is what's my overall size I can trade for my invalidation, right? It's not about what's the size that I can put on in totality, right, at any given point. It's what's my risk right now, and then I need to calculate my total amount of size that I can be trading for the amount of risk that I have on the table here with my invalidation. So if your risk is really tight, then you would need a limit, right? If you can only risk 10 points or your account blows up if you go over that 10 points, then yeah, you have to do a fucking limit, right? But if you're like, I know that I can risk, I can put on 3 contracts on ES and I can risk a total of, 4 points each on each contract for, 12 points in total on ES. That's my overall risk I'm willing to put on a trade. Then I can then size into that position with an understanding that that's the amount of money that I'm willing to lose on the trade overall, right? So it's understanding the plan and then understanding which trade type is going to work more for the amount of risk that I have that I'm willing to accept.
Israel and several Gulf nations are holding talks to promote alternative solution for exporting oil and gas through the routes that bypass Strait of Hormuz and the Bab el-Mandeb Strait.
Does that make sense what I'm saying? I think it's a really important point. And it's something that I think that a lot of you guys are still misunderstanding, is that not every trade is the same amount of contracts. Not every trade is the same set risk, right? We don't have a set risk. A lot of our trades are 10 points, but not always, right? And so if I'm trading ES, I'm trading around our structure, and my structure's invalidation is determines how many contracts I'm actually allowed to trade and what my stop is, right? A lot of the times I can manage, a 10 or a 5-point stop depending on the instrument I'm trading. I like 10 to 20 points on NQ. I like, like 4 or 5 points on ES usually, for the larger moves that I'm looking to capture, right? If I can make my risk 5 points and I can capture 10 to 20 points on ES, that's really good, right? That's a 4 to 1 or a 2 to 1. And if I can capture 100 points on NQ and my risk is 20 points, that's a huge return, right? So it's worth the risk. So for a lot of you, if the contract, if the risk is 20 points, then you can probably only trade 1 contract. If the risk is 10 points, then you can trade 2 contracts. Do you see what I'm saying? Your risk is static, but the amount of contracts that you can trade can adapt based off of, what your overall goal is. But in balanced trades, it's much easier to go for limits because we have known edges. But in a downtrend, the problem with limits is that you are, the offer is lowering, right? So you have a general idea of where that offer is going to be as we lower, right? But there's a potential that as we push into that, your limits above, you don't get filled, and now you're then going to try to chase because you didn't get filled on that limit. So for me, I don't like doing that. I think it's a little too precise. So it's just like, this is my invalidation. This is where I'm willing to put risk on. I see our initial reaction into this area. I see sellers step down. I'm now willing to push down with them. So you can see, like, my initial trades are not into this level. They're the response from that level, right? I'm selling with sellers after I see the absorption that I want. Do you see that on chart? Do you see how we see the initial reactions that I want to see from our participants, and then I engage? Right? So I see our initial reaction, I see the absorption, I then am engaging. I see the initial reaction again, and then I engage to add, because it's validated, right? It's checking my box. It's doing exactly what I wanted it to do, which is take in size into our area of interest, which is our 800. So if I continue to see that absorption being taken place, and I know that as soon as we get below this, that we will get that speed, right? Because this is where we absorbed, So I know that we're rotating between 2 points right now. This is our box that we need to break. And this is exactly what we talked about, right? This is that first reaction at that 90. And then we had our second reaction at what? That 85, 86, right? Do we see that this is where these people engage to the downside? So what I'm looking for is for that continuation. I'm looking to build my position into these highs without an arbitrary level, right? I'm not only looking to take in size at 98s because I might not get filled. I'm looking to enter on the push away from these highs with my risk at the top of this, right? On the invalidation, when we flip VWAP, I know I would be fucking screwed, right? Because then we would be going up. So to me, I'm just looking to take in size with these passive sellers that are sitting into here, and I'm looking for initiative sweeps to push us below this pivot here, where these guys got a bit absorbed. So as soon as we push below that, I now know that I can play off of that level, right? This is where we swept below. I now see them take in size again, and then we can play it down, right? So to me, I know that we're in a downtrend. So the way that I'm looking to trade is different, because I know that as soon as the market as a whole finds that resistance, that we're just in a channel down, man. And then as soon as I see that absorption step in here again, I'm then just looking to play with these guys back down to the other side. So that's how I initiate. I think that it makes sense, but if you have limited size, right, you have to change the way that you're looking to trade. So if you miss a move, the only thing that I'm watching for is, are we absorbing on this next leg? Wait for the absorption, play the sweep, right? This gives you your next trade. This is now where you're looking for price to be able to maintain, and now you're looking for them to sweep the previous bid, which is here. So all you're doing now is, oops, this is now where we're looking for that absorption. We're now looking for sellers to step in, and we know that we can add or we'll have legs on this trade as soon as we take out these lows and then offer it. That then gives us speed. Why? Well, this is where the bid was last. So right now you're in an auction where this is the high and the low, right? So now that we've identified someone who was taken in, I now can play off of that as our risk, and then we're looking for them to then take out these lows and initiate for that next leg down, right? And then again, remember, we're in the overall trend is to the downside. So the offer is lowering as we're pushing. So that's when I am just I'm either joining, right, the ask, or I'm just selling market when we're pushing up into these offers, looking for that secondary leg down. Because I don't want to miss it. We're in a downtrend. I know that the trend's direction. So until that shifts, I'm not wrong, right? And then all you have to do is then measure these levels, like on ES, like we have, and compare them to where we are trading on NQ and ES, right? So as soon as we come into these pivots on RTY, these are our highs on ES, right? It's a much flatter rotation that we were trading on RTY, but it's a very clear and known level where we are looking to initiate trades. So if you are unwilling to play these lower highs, all you have to do is look for the areas that have the same participation, right? Where are we finding that resistance across the market? And then look to initiate here, right? Look for your ES trades based off of where Russell is starting to lose that momentum. That gives you your next leg without you having to be put at risk, right? Because then all of a sudden you're not, playing this, you're playing the full market participation to the downside, which is then a much quicker leg because we're now initiating around this Russell risk instead of NQ and ES. I don't know if I'm answering your question, but it just depends on the trade type. If our trade type is we're looking for absorption in a area and we're waiting for Russell to lose momentum, then it's okay, well, I'm looking to initiate in this area and I want to give myself enough room for this trade to play out without stopping me out over and over and over again. Because again, nothing has changed. I know that this is our resistance into 900. So if we can't absorb here and make this lower high and we need to traverse back up to 900, I need to then wait for us to get up there and then look for that lower offer again and that absorption into this area to make sure that this is still valid, right? But if I can trap here, then I know that I just need to look for this setup, which is absorption into these highs, and then our offer to then step down, and then I can play this as our risk once I've seen these guys get absorbed, and I know then that this is a clear lower high, right? Does that make sense, what I'm saying? Like, if we know where we're looking to initiate, we can then watch for that lower high reaction and then that rotation back down. And if this fails, we know to stop out here because we're going to then go back up to our previous seller, because these guys then didn't have the enough initiation to continue us down. And again, like, the entire setup is based off of Russell losing momentum into these highs. And then we have our next leg when we can actually flip this. That gives us our next leg down, because we've identified where the buyer is on Russell and where the seller is. So we're playing around this as our oscillator, right, for where we expect weakness and where we expect strength, or where we expect relief, I guess is a better word, and where we expect selling, right? So like, we know that this is the short-term low and this is the short-term high, and we're watching to see how NQ and ES react as we push into these levels. If RTY is selling with NQ at the same time, then we can expect a much quicker, much more confident move in that direction, because now we have full market participation across all sectors, right? So like, that's all it is. I don't know if let me know if I answered your question, XY. I don't know. But again, like, what I look for specifically is I look for my plan to be playing. I'm not shorting because this is a trend line to the downside, right? Like, I'm not playing that. This structure that I've drawn on here is specifically so that you can visualize it. What I'm watching for is our order flow, because these are our participants that actually move the market. So if I know that the overall trend is down and I have this visual aid, and I know that Russell is selling here, and I know that we're looking for some sort of trapped liquidity because we're in a trend down and we're at this area of interest, and that our big seller is above us, and we're looking for the offer to step down. It's like, okay, well, where would I look for that offer to be if we were trying to step down? If that buyer was, like, where does the buyer want to break us out, and where does the seller want to defend, right? Like, that's the objective. So it's like, okay, well, I'm going to look at the value of our candle where we sold. This is the value high, this is the POC. This is the value high, right? So now I have an area where it's like, oh, this is where our previous value has been on the last two 15-minute candles. This is POC to value high, and this is value high of our previous candle, right? So it's like, oh, if this is where we were, this is the value high, right? This is the premium area from the last two candles. It's like, oh, I'm going to be looking for sellers to try to initiate into here, and then we need to then get back below for this rotation through. We need to show that we're willing to defend this area, because we can see it. We can see that absorption. So where do buyers want to break and defend? Well, they want to sustain here, right? They want to push us up, because this would then be a break of our downtrend.
Senior Gulf official said there's a 50-50 chance that Iran will reach a deal on the Strait of Hormuz by Friday.
So again, it's about understanding the battle line, right? Like, where's the breach in the auction for the downtrend and the uptrend here? Where would we go if this offer fails? Where would we go if this offer succeeds? And what are we then looking for from that area? Well, then we know where we're looking for initiative sellers on this push below 40s, like we talked about, right? So that becomes that area then where we want to initiate, because we know that if these guys get trapped here and then sellers defend 40, that we then get a leg down. And you can see that that's what played out, right? We get our defense here, absorption in, we get a rotation to our 40, and then we get our push down. So it's just playing around our pivots, but then watching for that actual participants to give us our trigger, right? Our pivots, our levels are our arming mechanism, right? That's where we want to be paying attention, our area of interest. But then order flow becomes the thing that filters out individual levels, right? The random walk of the market to something that's actually executable. because now we're playing around real participants, a real trap around a level of interest, and that gives you, instead of a coin flip, it now becomes an actual edge. Right, if it was as easy as just drawing levels on a chart and buying and selling the level at random on any touch, at any touch, right, like that would be remarkable. But it's not, right? Like the market, that's not how it works. Or I would just have already made, I would have already made an auto trader that does it, right? It's a bit more nuanced. Levels are areas of interest, but you still need participants to be there at those levels, right? That's the order flow layer. I do, I exit out, I limit out of trades. I market into most of my trades, XY, but I limit out because I have a set target, right? I know where we're going. So I'm looking to get into a position with a set amount of risk, right? So I have a stop, I have a zone of control, and then I have limits down the ladder as we push down. Yeah, sure. Like if limits work better for you, that's a personal preference, right? Do what works for you. I scalp, bro, right? So like to me, like I am looking for specific things and I am playing off the DOM. So I have a bit more of a detailed understanding of like where actual selling pressure is and where buying pressure is and where to like, you know, pull back on the market and when to like put pressure on. And that's going to come with time. But if you don't have that, right, like that's what I'm saying is like you can just set a area of risk where you're like, yeah, as long as this doesn't invalidate, like I'm totally fine. Like this is my $500 I'm willing to lose on this trade, right? And then it's like I will initiate here, and I know that when this stops me out, it's because my trade is invalidated, and I'm playing around the set amount of the maximum amount that I'm willing to lose on this trade, and then that determines where my entry can be. You know what I mean? My issue, I think, with limits again is that if you miss your entry, there's a strong potential for FOMO, because now you're going to get in at a worse position if you miss your edge trade, which like that's just a self-control thing, of course. But it also is one of those things where like
news reports of major hedge funds targeted in wave of attempted cyber attacks that includes the firm Citadel.
I think like it's kind of like when you don't get filled on a PT that was a limit at a specific point on your chart, instead of just like taking profit as we were pushing down, and then you like let that trade fully go back on you. Like it feels like ego driven a lot of the times, where it's like either I get filled here or I give back all my unrealized, or it's like either I get filled here or this trade is gonna go without me. And it's like, okay, well, does that logic actually make sense, or is it like, is everything playing out exactly how I want? Are we trapping liquidity at lower highs? Are we initiating into my levels of interest? Is it within my risk parameters? Because like if all of those things are being met, then I might as well put on size, right? I might as well initiate or scale into that position, because I know that the overall play is working and my target is 100 points lower. So is my entry going to really matter, you know, if I limit in 5 points above, or if I build my position with micros, you know, in 2 to 5 lots, and then my overall average, you know, is it just within my zone of control? Is that 5 to 10 points really going to matter when my target is 100 to 200 points below? No, is the answer, right? It just depends on what you're comfortable with. If you understand like what you're willing to, what the overall trade's loss potential is when you go into it, then it's like, oh, okay, well then now I'm just building my position around that loss, right? And sometimes like your losses, like you don't want to lose a lot, right? And like it's like, oh, okay, well now I have to be much more precise, or I need to be trading less leverage, right? Like those are your options: more precise or less leverage. So again, it's just like, what are you comfortable with, and do you understand why you're trading what you're trading? Because if you do and nothing's invalidating, it's like, okay, well, yeah, I'm just building in the setup, and it makes sense to then take for that next leg down, because I understand that if this works, me, potentially missing this trade because I didn't get filled, 2 points above me, is not worth missing out on a 100-point rotation. That's kind of how I feel. Right, because it's not about the level itself, it's about the plan. It's about understanding like where they're taking in, where they're absorbing, where we want to go, what's the market state. And as long as that state is still in play, right, then who cares? As long as we're respecting our risk, then who cares? The problem for a lot of you isn't that you're marketing in the wrong areas. It's that you're FOMOing into trades after not playing an edge, right? So like there's a difference between me marketing in, after an initiative sell at a level of interest, and then you marketing in to sell at the bottom of a range, and then you stop out at the top of the range, but nothing is invalidated. But you're like, you've added a ton of size either in like the middle of a range or the low of a range, and now you're over leveraged. You're unwilling to risk a full rotation back up, right? Because you have too much size on, and you can't, your account or your mentality can't handle the drawdown, right? The unrealized loss that you're currently in, because you've added too much size to a position, and you now can't hold through to the invalidation point. You now have to stop out at your max pain point. Do you see the difference in that? So it's not sizing around your invalidation, you're sizing around your max pain. And that's a very different thing, because you could still be right on the trade, but get stopped out because you've over leveraged. Yeah. So like that's kind of what I'm really trying to get at here, is like, you need to know what your max pain is before you call it quits on any given trade, and then you scale your size based off of your max pain. So if I know that my risk or my invalidation point is, this 6-point area of interest, then that gives me an understanding of, well, my max pain is $1,000 on this trade. So how many contracts can I scale in if I know that I am risking 6 points per contract, right? Then that gives me my size that I'm trading around.
According to news here, Arab sources report a missile attack in Bahrain.
If my size my max pain point is $200 in total, then I have to then scale around a very different set of parameters, right? But my zone doesn't change, my invalidation point doesn't change, but the amount of contracts that I can trade has to change. And that's the mentality flip that you have to have, is that it's not about having a set stop based off of points, right? Because what you're saying is that this is my max risk. So, but has the trade invalidated? No, right? So you size, again, like, I don't want to keep repeating myself, but like, it's about understanding where you stop out, what your trigger is of being like, oh fuck, I can't lose more than this. So then you have to invalidate, right? You close the position. So start sizing around the zone and understanding of where that is, and then that sets the amount of contracts that you're trading at any given point. It's a very, like, it's not going to make sense to you at first, but like it's like literal common sense, but it's something that you aren't doing. I know that most of you aren't doing. You have a set size, you trade the same size per trade, regardless of the setup, regardless of where we're potentially headed, with a static risk. And it's like, why though? Not every trade is the same. Not every setup is an A+, right? Not every setup is a C. So why are you trading the same size for the same setup if you know that one setup results in way more points usually than the other? Should you be risking the same amount of points for a 20-point balance rotation if we're in an overall downtrend with a target that's 100 points away? with 6 points of risk above. Like, no, that doesn't make sense. You're looking for a very different risk to reward ratio with a much better setup. So you should be trading that because you understand that your the setup is different, right? And the probability of that setup playing out and going to target is a very different risk to reward. Right? This is why, again, journaling matters, having a playbook matters, is because then you understand where you should when it's worth putting risk on and when it's not, right? What's the expectation? And again, it's about understanding your max risk. What are you willing to lose per trade, and then building around that. So and again, you can have static. Your risk can stay static, but the amount of contracts you trade won't be. Yes, yes. Yeah, no, I see it all the time from you guys where you are averaging down on positions and then you're looking for that next leg and you're like, you had a beautiful entry at the highs and then you took off size and then you try to add again at the low of the balance without a breach. And then the price, instead of breaching the lows, rotates back up to your original average. And now you're stopping out for either break even or a loss, but nothing's actually invalidated. You just added more leverage to a position, and then you were uncomfortable when it didn't immediately work out for you, and it came back to your break even. And it's like nothing changed other than you got greedy and added, and then were unwilling to, and you didn't rationalize your potential loss if this trade didn't work out immediately for you, right? You only looked at what your potential gain was, not the potential unrealized loss if this doesn't immediately work for you. It's like, you have to look at both sides. Like, where could price go if it works? Where could price go if it doesn't work? And am I going to be able to eat that loss if we do go back all the way up to retest, the last seller? What if this seller doesn't initiate here for a lower high, right? Like, where would we go? And am I willing to hold through that? Or do I need to stop out with an understanding of this is where, we would go if this doesn't work out? Again, like, a lot of you are just like way over leveraged, and it's understandable, right? You want money now, you want your payouts quick, you want you want to be passing your evals faster. Like, I get it, but like, use your brain. that's all I'm asking. Like, are you trading the P&L or are you trading the setup, right? That's what we talk about all the time. And when you do shit like that, you're trading your P&L. You're not letting the process become the thing that makes you your money, which is literally all we teach. So when you start to trade your P&L and you add to positions and you don't understand the risk that you're putting on, and then you stop out of trades that haven't invalidated, it's like you're just trading your P&L, bro. You're not trading the setup. The setup never invalidated. The trade's still in a downtrend. You should still have a runner on. Nothing has changed, right? Like, are we in a balance day or are we in a trend day? Should I be closed on my full position if we're in a trend day? What's our rotation? What's my target? Am I leaving money on the table by taking off full size if we haven't invalidated our lower highs and our lower our lower highs and lower lows? Like, are we still just channeling down? Yeah, right? So what makes more sense risk to reward wise? To full close or to just move my stop down and play the next lower high? Like, how much money am I leaving on the table? And the real question is sure, you can close if you're leaving, but am I going to then close my full position and then try to get back in here does it make sense for that to happen, or could I just add another contract and then move my stops down, right? If I'm going to try to get back in and I'm staying here in my seat and I'm going to then continue to look for more trades, then like, why not just add a position once we've actually confirmed that we're going to flip? Again, like, has the trade invalidated? That's the question you're always asking yourself. Where could we go? Where are we currently? What do we need to see for this to continue
S&P
down?
500 raises gains. It had been up as much as 0.7%.
I guess if you're asking yourselves those questions, you're going to be in a much better position, because now you have a understanding of where the market is, what it's doing, and it's not about your P&L. It's about where we could go based off of the auction, and that's a much better guardrail to be trading around than just like, oh, I made, you know, X amount of money. Now I got to close. And don't get me wrong, like, some of you need to be trading around that system because you're trading a prop firm. So you're trading X amount of money because you need to get to a payout, right? Like, there's only so much money you can make on a given day. So if you've like met your criteria, then yeah, close out of that account, do what you got to do. But like, that's a different reason to be closing than just, you know, an arbitrary thing. You're playing a set of rules that your prop firm is designed, whereas we're still in a trade because we have the ability to continue to make money. So it's just like, again, it's just play around your system. Yeah, man, it is what it is. This single print down here into our ES 61 to 45 was pretty reactive on first test into the single print edge at 61. I think we'll probably keep going down. I'd like us to go down to 48s on ES personally. I'd like to fill this single print. But we have to be respectful of this 61 edge as we push in. Our first downtrend target, which is labeled DT for downtrend, right, or down target, downside target, is 50s here on NQ off of the flip of our 800. Russell leading down. We've got a little bit of room, but I'm a bit worried about ES specifically just because of the single print. Yeah. But yeah, no, like I think that a lot of you need to be playing around your max pain, right, and your risk to ruin. Those are the things that you guys don't think about, but like it is your account, right? That's DT1 here into NQ. A little push into our single print here halfway through. Russell continuing down, has a bit more room. And we can go over those concepts here shortly. But like, the risk to ruin is something that you really do need to calculate. It's incredibly important. So it's like, if I'm going to trade this amount of size, how many trades can I take in a row? How many trades can I lose in a row before my account blows up, right? What's your risk to ruin? And it's like, okay, well, what's my risk to ruin based off of my size that I'm trading and my risk to reward that I'm trading, right? Because like, a different win rate has a different risk to reward if you have a set amount of contracts that you're trading. So does it take 3 trades to blow up? Does it take 1 trade to blow up? Does it take 7 trades in a row to break up, to blow up? Like, what's my actual risk to ruin on an account that's realistic? What's my win rate? If my win rate is 50% and I'm, have a risk to ruin where I'm trading, $500 of a $2,000 drawdown. So I'm trading 1/4 of my drawdown for each trade. It's like, okay, well, I have a very clear understanding of what my risk to ruin is, right? So what if I'm trading 1/4 of my size and my win rate is 50%, what's my risk to reward need to be for me to be a profitable trader in that scenario? And what's the probability of me then blowing up, right? Because like if I'm trading a 1-to-1 and my risk to ruin, I'm trading 1/4 of my account size and I have a 50% win rate, that's going to be a very different risk to reward than someone who's trading, 1-to-6 risk to reward there compared to a 1-to-1 or a 1-to-2, right? Like, because the potential return is much higher and our trades are much filtered, we could probably survive that because our reward is higher. But if it's much lower and your risk to reward and your win rate is lower and you're still trading that large of a size, like, you will blow up. It is statistically, you will blow up because your reward is too small for your risk. You're going to eventually lose 3 trades in a row and your account's done. So you have to be matching your win rate to your risk and then to the leverage that you're trading, right? Like, it all is one cohesive package. And a lot of you are just thinking about the amount of money you could be making, and you're not thinking about that you will lose trades, right? No one thinks about how many trades they're going to lose. But like, if you have a 45%, a 50%, a 60% win rate, like, statistically, you will have, at a 45% win rate, you are statistically proven to lose like 7 trades in a row eventually with a 45% win rate. Like, it will happen, and more frequently than you think, right? So you need to know how many trades you can lose and what your win rate is based off of your playbook that you're trading around. Because if you have a 45% win rate and you're trading that size, you are destined to blow up. You will not survive. It's just mathematically proven. Right? Like, here, this is a good way to look at it. We've brought this up in the past, but like, check this out. So this is a auto trader that I'm working on. This is silver. It is profitable, but look how many trades it loses in a row because of its win rate. This is a profitable strategy, but it goes through periods where it loses multiple trades in a row. If I was sizing differently, I would be blowing up my account. Instead, what are we doing? Right? Like, if I look at this over a year and I understand what my win rate is on this, I need to be sizing accordingly. This is incredibly profitable overall, right? But if I don't understand that this isn't a wins every trade every time it takes a trade scenario, then I need to be sizing around that idea, right? To stay in the game, to stay within my drawdown. You have to play around that. So I need to understand that I will have losing streaks, but the overall curve is to the upside. And if I continue to follow the process, then I will be a profitable trader because I'm playing within the structure that I've set for myself. You feel me? Again, it's about understanding your win rate and then trading around leverage that makes sense to be playing around the amount of trades that you will
Wall Street Journal,
lose.
Google chief scientist, Livingston own AI company. Also seeing the Alphabet shares dropping session low down 1.5%.
Again, like, I will go through periods where I'm losing in this setup that I'm playing. It happens. It is part of my model that this will go through losing streaks. But again, it will be profitable and I will not hit my max drawdown that I've set for myself within the parameters. And this is like a very low win rate strategy, but again, it's profitable. And if you're trading something like AMT, your win rate is going to be much higher than 30%. This is a strategy that I know.
One of Google's earliest employees and architect of its AI strategy for the past 15 years, is leaving the company to launch an AI startup focused on scientific discovery.
This is a strategy that I know works, but that would be mechanically.
The startup will initially focus on automate the process of machine learning research and engineering via its own internal technology stack. Eventually, it's planned to apply its technology to various areas, including hardware design, drug discovery, global challenges such as clean energy, according to the news release.
Something like that is a strategy which I want to automate because I know it's winning, but I know that if I was manually trading it, that I would be emotionally destroyed.
So Google shares continue to move further down off the back of that news from the Wall Street Journal.
Right? So you have to understand and let strategies play out, and that's the beauty of something like an automated strategy. Is I know that personally, if I was trading something that had that win rate and had that potential to lose that many trades in a row, that I wouldn't be able to do it manually, right? I would be too emotionally distraught by the amount of losses, and I would be then taking other setups, and I wouldn't be letting my edge play out over time. But if I can automate it, then that I can allow that to play. I can allow those trades to play out with the full risk, right? And I don't have to touch it. I'm letting that automation play, and I'm letting that edge play for itself without having to do anything, right? With something like we're doing, we need something that has a much higher win rate because we can't accept those losses because we are humans. I can't accept a strategy that's going to lose 6 times in a row.
Shares now extending their decline to 4% off the back of that headline.
Personally, right? Like it's just very hard for me to go through that.
Shares falling sharply after company unveils leadership shakeup at DeepMind. The stocks last down 3.8% and now down 4%.
Right? So like you have to be comfortable with what you're trading. You have to understand it enough to be willing to, again, every trade that you take is about understanding your risk, understanding what your potential loss is, how many trades you have statistically that you could lose in a row based off of your win rate, the probabilities of your setups that you're taking, right? And then filtering it to a point where you're able to
Sabis stepping down as Google DeepMind CEO to be chair.
Filtering it to a point where you're comfortable actually being in those positions. You could have a winning strategy, but being uncomfortable to actually take those trades. I mean, I see you guys stop out of shit all the time that was profitable, but you just couldn't handle the leverage or the unrealized or realized losses that it requires for it to play out, right? And so like if you're uncomfortable with that, you need to then either filter it more, right? Filter your strategy more, so only be taking the A+ setup so that your win rate goes up a bit, or the reward goes up to a point which buffers.
S&P 500 and Nasdaq turning lower. S&P 500 flat, Nasdaq 100 down 0.5%.
I'm flat on ES. I just have NQ left here into these lows as we're talking. I just want to make sure that I took this position off. Again, it's just our 800 pivot, our lower absorption, and then playing it down into this single print down here. So we've now captured 50 points on ES in total from our pivot at 800 down to 750, which is insane. Huge trade. And yeah, it's just a fucking channel down, guys. But let's see if we can get more. I don't know. But like, again, this is the things that we're talking about right now are really important for you to start to recognize and like kind of like this is the difference, right? Like you can get lucky, right? You can coin flip and make money. But what gives you consistency to continue, right, is by sizing correctly, sizing within your parameters that make sense, because that's going to keep you in the game. Right, you can have a couple really nice winning trades and have over leveraged and make money, but like that doesn't keep that account alive. That doesn't give you any sort of ability to do it again, right? At a scale that makes sense, that's profitable. So you need to be trading within your parameters. Like you can have a fat-tailed strategy that it has some banger trades that make most of your money, but you have to understand how many trades. Again, it's going to take to blow up at an account at any given time, and does the amount of trades meet the drawdown and the leverage that I'm currently trading, or am I going to fail from the start just based off of the risk that I'm using and the strategy that I'm trading? That's the whole point that I'm trying to get at. Is if you buy a 50K account and you have $2,000 drawdown, and you know
UK
that you have a 40.
MTO says it received a report of an incident 95 nautical miles southeast of Yemen's Aden.
If you have a 2K drawdown and you're trading a strategy that's 50% or 60%, and you're trading, you know, a 10-point stop, are you giving yourself enough room for that trade to play, or are you just failing from the start and slow bleeding because your risk to reward doesn't match your drawdown and your probability, your win rate?
Explosion in close proximity to the vessel.
Like, you have to know that, or you're literally just blowing up to every time because you're just not trading within your parameters. Like, it's, you have to rationalize this. Like, it might not be that you don't have an edge, it's that you just aren't giving yourself the room that your edge needs to play out. And then it's like, okay, well, if I know that that's what's happening, and all I need to do is have a wider stop and stop trading so much leverage for my edge to actually play out and for me to make money, then it's like, oh, whoa, all of a sudden, like, I've been the one that's been standing in my way because I've been too scared to play my setup because I've been trading so much leverage that the max pain hits before my actual invalidation happens. And then by the time the trade actually plays out and everything's going the way that I thought it would, I don't have any drawdown left because I was emotional with my stops, and now the trade's fully played out and we've gone to target, but I'm not in that position because my account's been blown up before we even got there, right? Like, how many, I feel like I'm probably talking to a lot of you with this. And it's like, oh, if I know, again, if I understand my pain threshold, I understand where we're going to go, I can then play around those areas of interest, right? That zone, and then I can size correctly for things to play out. Some of, again, a lot of you are just greedy fucks. You need to like rationalize that that's what you are, and be like, okay, yeah, like I gotta get under control because I'm actually getting in my own way with my greed. It's crazy because like you're greedy, but you're also scared. It's like as soon as you realize that like losses are just like something that's never going to change, you're never going to have 100% win rate. And if you think that you aren't going to have realized losses and that you're not going to go through drawdown and trades, like you just are still completely irrational, right? Like you still don't get it. Like it's going to happen. No one has 100% win rate. No one wins everything. And so you have to then trade within a strategy, right? This is where your playbook, your areas of interest, your invalidations, your reasoning for your trade becomes so important, because some trades that are A pluses aren't going to work out. A plus doesn't mean you have 100% win rate. It means that these are the parameters that have the highest probability of playing out.
This is a round of talks between Israel and Lebanon in Rome concluded today.
Even a trade that has a 95% probability of playing out can fail.
Events on the ground. But we'll resume tomorrow morning.
Like you have to know that statistically, that even a 95% win rate, you are going to fail eventually, and that trade won't work out. And that's okay, because you're playing within your leverage, right? You're playing within the risk that's manageable for you.
Also adds the professional teams recorded progress in formulating the key details pertaining to the implementation of the framework agreement between Israel, Lebanon, and the US.
We're almost at my target on ES into 48, just pushing through our single print. NQ traded to our 750 target. I'm looking for 685, downtrend target 2, off of our flip of our battle line. And then we have a single print down at 620 that I'd like us to trade into today by close. That's kind of the goal here. But yeah, it's just trading our plan. You can see that it's playing out to a T. We held our rotation down, and we've played down into our single print and battle line. I have fully closed my ES trade personally. The single print has been played out. It is full. To me, it's fully realized. We are now looking to see
shares of output extending declines to more than 5%.
I'm looking for NQ to continue down again into 85s and then 620 below. Technically, we're still just trending down. No change here. I hate missing any trade, which adds added stress. I now accept what happens and don't expect to take every trade. Yeah, no, you can't, right? Like, and you shouldn't, right? Because not every trade is something that is either, you know, one, within your risk parameters. Like sometimes some trades just aren't going to have entries based off of your max pain, right? Like some entries just that's too much risk for what you're willing to lose. And like, if that's the case, like, that's okay. Like, you have to understand your account's value. Some trades, you're only going to be able to take one micro because your risk is 25 points, right? And it's like, okay, well, like, this trade isn't validated, but I can't find the perfect entry. And so if I can't find the perfect entry, I need to just let this shit play out with risk I'm comfortable losing, right? So if you have like a really tight risk profile, you can have a really you can trade more contracts because your risk is really tight, like 5 points, maybe 10 points. And sometimes we get those, and that's really nice because then I can trade more contracts, right? But sometimes we're chopping around, but nothing's invalidated on the higher time frame structure. And it's like, am I going to be able to find the perfect entry in chop? Probably not. But as long as we're holding this zone, this trade's valid. So it's like, okay, well, if my invalidation area, you know, is 20 points now, well, now I have to half the amount of contracts that I'm trading because I want to still maintain that same risk profile if I had a 10-point stop, right? It's like, oh, okay, well, maybe it's I'm playing off of a higher time frame pivot on the 15, and I'm playing off of the you know, the POC to value high of the previous 15-minute candle, and that area is 45 points. It's like, oh, okay, well, I know that I can size into that area, and I can start to pyramid into you know, that area in 5 contract increments of micros instead of taking, you know, the 3 minis that I would be playing. I can now size in 5 lots, and as long as we're holding within that zone, I'm willing to, you know, let that play out. And so now I have different sizing conditions and different entry mechanics based off of the amount of points that, you know, my risk is, my invalidation is. And that's like actually how you trade. Not everything is just set in stone. And again, like, I personally try to take off for like 1 to 1.2 first risk always. Some people will call you batshit for that, you know, but the reason why I do that is because that makes my trade free, and then I let my runners run and make me money. My job is to get rid of the risk that I have on as quickly as possible, and then let trades play. Am I leaving money on the table? Potentially, right? But I am also completely removing my risk to ruin when I do that. And then I let my runners run, and now I have fat-tailed trades, right? So I'm profitable even if it fully went back on me, but I'm also now allowing myself to scale out by the way that I'm sizing. If I only have one contract, I can't do that, right? It has to either go to target or stop me out every trade. With something like this, where I'm trading an amount of contracts where I can scale, take out for 1 to 1.2, that allows my trade to be free, and then I can then let my runners run and then scale out on those for way more money to cover it. That personally is the system that works best for me, that I've found the most success with, because it is the least emotionally and mentally draining. And that's the system that I want to be in, because I want to be able to survive and control my tilt as much as possible, because I understand myself and what's going to affect me. If I can limit my emotions and before we even get to that area, right? Before I get emotional, and I can limit my losses by securing gains, right? By playing around very clear invalidations, I know that I won't be in a position to tilt in even in the first place, because I'm trading a system that I've designed specifically for me to never get to that point. Again, we've had this conversation before, is like, you have to understand your ticks, right? Your trading, you don't design a system about when you're doing well. You design your system around what happens when you blow up, right? On the days that you blow up, on the days that you are emotionally unstable. Your system needs to be designed to either catch those days, right? Catch yourself before that happens, or prevent mass casualty, right? Like you don't, you do well for weeks and weeks and weeks, and then you have a single session where you blow up your account, where you go through your entire drawdown. Should you be designing your account for that period where you do well, or the period where all of a sudden you lose it all because you were an idiot and emotional? I mean, I guess it depends, right? Do you care about survivability? Is blowing up an account going to make you emotionally unstable for, you know, a week afterwards where you have no confidence, right? Like, how does it affect you? You have to know that, and then you have to trade around that. Some people are more than willing to blow up an account and they will risk their entire balance because they understand that that's just part of their strategy. You know, they have big winning streaks, they'll lose, and then they blow up, and then they'll move on to another account, and then they'll write it off as, you know, an expense on their balance sheet. It doesn't matter to them. I can think of like 17 different people on Twitter who blow up accounts on a regular basis, but they're still profitable, right? It's part of their strategy. They don't care. But if you have no money, right, and this prop account means the world to you, then you should probably not be trading a strategy like that, because you need it, right? They don't. All right. I think these are some good conversations. Anything else you guys want to talk about, or we're just chilling in this trend? Yeah, I mean, that's like being able to prove to you guys that you can be profitable with a 50-50 coin flip without even having a chart open is like really big, because then it's like, oh, all I have to do is control my risk, and then like I can make money. I don't know, but it's hard, man. It's hard to be rational. It's hard to not take every rotation, right? It's hard to play my playbook. It's hard to have self-control, you know? I get it. I really do get it, but it's going to be very hard to be profitable for any sort of like longer term extent if you continue to just not want to do the work, right? Like, is this a business, or is this like, are you playing slots? Because if it's a business, like, businesses require you to record, right? It requires you to go through your losses. It requires you to understand what you're doing.
According to INA.
Right? Like, if you're a chef, you're cooking based off of recipes. You don't make it up on the spot every day. You don't change your menu every day, right? You have a menu that you stick to, that you've perfected, that people come to your store to because they enjoy those things, right? So if you have a successful strategy as well, you have a playbook, you play your setups because they have shown success, right? You don't take random things that haven't shown a profitability. You trade your setups, and if the setups aren't there, then you don't trade, right? Like, it's the same thing. And when you have losses, you go in, you play tape like you would in a sport, right? You go and you look back at your losses, you learn from them. It's the same thing in everything. Everything that's, if you are a professional, if you're trying to treat this as a business, if you're trying to make money long term, you have to do the work, just like in any other job. It requires you to do the work. But once you do the work, right, then you have something that you can scale off of, and that's the important thing. Yeah, I'm done talking. This move seems I don't think this is real. I think it's just a relief rotation from our single print with Russell coming back up to our offer. We'll see what happens up here, but I don't think anything's changed personally, not yet. This is a very light rotation into lunch. For me, it seems the more trades I get, the worse the days I have, and spiral kicks in. How do you transition to taking more trades and sizing up comfortably? Well, I think for a lot of you, you don't need to take more trades and you don't need to size up. You should only start to take more trades on a day once you have really mastered what you're doing. I think for a lot of you, you should just be taking your playbook trades and then like be happy with your profitability. Like I said before, if I wasn't streaming, I would have left after our first trade today. Like, I think most of you should not be discretionary trading. There's no reason to do it. And it's exactly the reason why of what you just said, Ali, which is like, the more trades you take, the worse the days are for you. So like, that's an easy thing that you can eliminate for yourself, which is like, okay, I'm setting a maximum amount of trades that I'm going to take then per day. Even when I'm winning, I have two options, right? Either I stay in my trade until it stops me out on my runner, right? So that I don't overtrade, or I have a max amount of trades that I'm willing to take. And once I've hit that, I then dip out, right? Like either I get stopped out on my runner or
Just heads
I
up here,
leave
Rubio
because
and UK's Foreign
I've
Secretary
used-
Miliband discussed commitment to Hormuz safe transit.
I've used all my
Right,
bullets.
they did have a meeting not too long ago. The video that we originally had on the feed just showed them walking in, and there's nothing else to it now.
And like the thing that you need to accept is like the market's going to go without you, and you have to be comfortable with the market continuing to go, right? It's not about capturing every rotation. It's about doing what you needed to do, right? Following your plan, initiating on the trades that made sense to you while you were within your time, right? The time constraint that you've set for yourself. And after that's done, to then fuck off, right? Like that's part of your job, is to clock out. And you need to realize that like the market is going to keep going, and that's okay. You don't need to be there for it. You've given yourself, X amount of time, trade within that time, and then leave. There's always tomorrow, right? There's always another trade. There will always be another trade. So if your mentality is like, what if this happens? What if this happens? Oh, I'm going to miss this. It's like that it will always exist. That it will always be there, right? It is a 24/7 market. So that mentality is going to screw you. You need to trade within your system. That's the only thing that matters. So if you do well between 9:30 and 11:30, and if you've made money or you didn't make money, but it doesn't matter. Like that is your period where you clock in and you clock out. That's where that is the time that you have dedicated to the market, and it needs to stay that way. As soon as you start to get outside of that area, all of those trades should be bad, right? Like that, even when you win, you're still fucking up because you've set a time and you are now failing to stay within the parameters that you've set for yourself, where you know that you consistently win. You know that you do better when you only take 2 to 3 trades a day, right? Then why are you taking 50 trades? If you know that you do better with a smaller size, right? Like just prevent it. Create a system for yourself. Trade that system. Yeah, no, the P&L is, you need to hide it. Like, honestly. You could think of it in, I think a good way to transition from that is to start thinking instead of P&L into risk to reward, maybe? That could be helpful. So it's like, oh, I made 3R on the day. Or like, oh, I'm down 2R. Or it's like, oh, I'm up, 10R on the week. Or it's like, oh, okay, well now I'm trading within structure. I'm trading within the risk parameters that I've set for myself. If my R is $500, right, my risk to reward is, where I'm willing to risk $200 per trade, let's say, then each R would be $200, right? So it's like, oh, my first trade of the day, I made 4R because I was risking 200 and I made 800, right? It's like, oh, okay, well now I have 4R for the week. And it's like, oh, okay, well now I'm not thinking about in P&L, I'm thinking about within the risk to reward within my trade parameters that I've set for myself via my playbook, right? So like that could be helpful. It just really depends, man. It's hard because, again, this is such a personal thing. Like, you have to do and design your system around like the things that are going to keep you in the game. Like I was saying before, like it's not about what you do on your winning days. It's about what you do when you start spiraling. So you need to know the ticks, right? The things that trigger you when you start to spiral. And those are the things that you're then need to build your strategy around, because you build your stuff around your worst days, not your best days. Remember, it's all about filtering out those bad outputs so that you never even get to that point in the first place. So if you know that you sometimes make money if you overstay, and you sometimes make money if you trade more often, right, more frequently, that's not a reason to do something. If you sometimes make money, right, you want to be only trading the periods where you have the best chance to be making money, where you make money the most often. And then you want to eliminate the periods which are a little bit more murky, right? We want to refine. And just because you could potentially be making something doesn't mean that should be part of your system. You want to be looking at the days where you blow up and the periods where you blow up and what happens during those times. So if you know that you start to overtrade midday and you start to revenge trade and you start to chase because you've stayed longer than you usually do, it's like, okay, well, I usually blow up, at this period of time or after this many losses in a row. And it's like, okay, well, now I need to create preventative measures so that I can't even get to that point, right? It's like, oh, okay, if I take 2 losses in a row, or if I catch myself taking a trade that wasn't in my playbook, I need to stop, because I know that I will start to not be rational and I will not follow my rules after this point, right? Like, you have to have guides in place for yourself for those bad days, because once you're there, none of it's going to matter. You're not going to follow shit, right? That framework is the most important part, is what's going to catch you and how do you prevent from that spiral, right? Most of you, it's like, oh, okay, I'm gonna revenge trade. I gave back all of my gains. It's like, oh, okay, well, now I've got to make up for this. I was up $1,000 and now I'm down, $50 on the day. It's like, well, I can't close now that I'm down, I lost all this money. It's like, okay, well, now this is where I start to spiral. It's like, now I have to make it back. Now I'm going to over leverage because I need to make it back quickly, because I have to recover, or I'm a failure. It's like, no, you're not, man. You will be a failure if you continue to trade and over leverage to try to make it back up, though. But you will have losers, right? Like, you will make mistakes, but that doesn't mean that you should give up on your entire process because you made a mistake, right? That's the important thing. A mistake is just that, right? It's a singular thing. Don't let it turn into something that ruins all of the effort and time that you've spent. Don't let a mistake become a larger issue. Let's see if we can flip this battle line on retest at 800s. This could be good. I'm watching. We would need Russell to find a bid at like 34s, I think, 34, 35, if it was going to do it. So we'd be watching for a bid here into these lows on NQ with Russell defending these lows here, I think, if it was going to happen. If not, then this will be a decent trap for continuation down if this fails. So I'll watch to see if we find relief here into this, or if this starts to like fade on a rotation back through. I think Russell determines direction here if we are able to hold these lows. All right, let me see what you said. I'm on my 3rd eval now, but it literally has boiled down to me having consistently more green days and trusting my intuition on solid setups, but then the spiral kicks in after the fixation on PNL. This morning I tried playing the opening range high, retest to upside, got stopped out, and then tried flipping when we tried doing the other side, got stopped out again. Then my spiral kicked in and I started fixating on PNL. Yeah. No, I mean, yes, that happens. And it is totally understandable, right? It's because like your setup didn't work and now you are looking to see like, okay, well, maybe it's this thing, maybe it's this. It's like, oh, okay, well, like, it's just, it's as soon as you start chasing it or you have a loss and you start to like look to make up, or like quick recoveries instead of just like letting it systematically recover, right? Like that's when things are going to start to really screw you. Right? Like, yeah, like again, losing trades is part of the process. It will happen. You will never have a 100% win rate. You will never win every trade that you take. And so if your goal is to always win and to never be uncomfortable because you lost, then like you will always fail. Right? You have to become uncomfortable with trades not playing out. And so when you chase the other side to try to make up for those losses because you're uncomfortable, right? Like you have already kind of lost on the day because you have the wrong mentality. You have to be like, okay, well, if that trade didn't work, where will it work? Like when will I be comfortable? When does it actually validate? Right? Like are we looking to break out? Are we trading balance? What does that look like? Right? You have to like ask yourself those questions after a trade fails. And maybe it's just about having, you know, a 5-minute pause period between trades that you lose, where you're not allowed to take another trade for 5 minutes. And now your job is to either, you know, walk away, grab a glass of water or something, or use that 5 minutes to fully mark out your chart and your rationalization for either side, right? And be like, oh, okay, well, this is where I would think price would go. This is where I think it would be defended. This is what I think would happen. This is where I'd want to be looking, right? And be like, oh, okay, now I'm fully taking a step back and I'm looking before I get into another trade where I'm just reversing my idea. It's like, does that idea work either? Are we just balanced? Is there nothing? Is it just noise? Was I right in my idea, but it just didn't play out, right? Sometimes we're going to have really good ideas, but shit happens, right? There are variables that aren't under our control. You might have seen the right thing, but it just didn't play. Just because your trade didn't work that time in that instance doesn't mean that you did the wrong thing, right? And that you should reverse. It just sometimes it doesn't work, right? But you won't know that until you go back and look, pause, and be like, yeah, that was a good trade. I'm proud of that trade, even though it didn't work. Right? Just because you lost that trade doesn't mean that the other side is going to play. And then you exactly saw that where you got stopped out on the other side as well, right? Like sometimes like just the market isn't good. You saw a good setup, but like there wasn't follow through. And there not being follow through isn't your fault. You did everything you could. You saw the setup, but like you are not the one that's pushing the market up, right? We need participants, and sometimes those participants fail. It happens. I don't know which way we're gonna go here. I'm watching Russell to see if this flips and holds, or if we hold here on full market on retest. It's too slow for me to know yet. I'll be right back.
Deputy Iranian Foreign Minister spokesperson says the agreement between Iran and Oman regarding arrangements for the Strait of Hormuz is near completion. Significant progress has been made. It's IRNA citing that interview there. And as Deputy Foreign Minister for Iran. So yeah, that was Iran's Deputy Foreign Minister Karababali speaking to IRNA.
I had to grab a cough drop. Doing a little too much yapping. I don't see a setup on NQ, but I do see one potentially forming on ES that I might like. I just need to see what's going to happen. Okay, so first of all, it's on both setups. NQ, we're watching for what happens into 810. If offer holds 810, then we go down on retest here. Same setup is there on ES into 71. So I'm watching this. This offer here, if this holds lower high, these guys are then stuffed. And then we would then be holding our battle line for continuation down with these guys trapped below. So if this holds, that could be good. With ES into our value of our previous candle.
Iran and Oman is finalized, the reopening of the Strait of Hormuz will require separate arrangements that also include the fulfillment of US commitments.
So watching that, this reoffer will be important. Because then we would have potentially this liquidity trapped and this liquidity trapped into this high with a Russell lower high. But if it maintains and we can flip this, then we're gonna have the opposite, which is then this liquidity into this low will be trapped, and then we'll have an initiative bid step up above. So it's a two-sided auction right now with a lower high potential. I'm keeping an eye on it. Into our 810 now on NQ. And our 7071 on ES as we push. We want to see like a very clear lower high with Russell ideally rejecting these previous bids right here at this 34 area. So we're pushing. Right, because then that would be full market participation below a pivot with then someone trapped above, potentially, across the board. But we need to see an initiative participant here. Or this will fail. These guys then will be trapped into lows, and then we will then look to take out highs. And then the initiation will be on the flip of these highs, actually, for a long. So just really watching Russell here, ES and NQ here. See if we get this lower high across the board and a willingness to sweep, or if they're going to hold this. This is value of our previous candle here into 7071. Oh shit. I need to see absorption, and then I need to see us sweep the lows that we just bounced from the 71 if we're going to do anything new. If not, again, we will look for the opposite trade. If we take out highs and then bid, because then we'll have trapped liquidity at lows. Right now we just have like a really nice lower offer with full market participation for a potential down leg. But if that invalidates, right, like of course you step out of the way. Good initial reaction so far. Trade's profitable. I don't know if we're gonna get follow through. We'll see. Needs to get below 780 on NQ, below 64 on ES for more. Or we will just bounce here and potentially fail on retest. We'll see. Russell still just kind of like holding this. We're basically stuck between two zones, this lower auction and this upper auction. So we would need to sweep below 32.4, I guess, if we're going to keep going, and then we can at least rotate down to these.
Iran's Deputy Foreign Minister Garibabadi says the agreement with Oman does not mean implementing Article 5 of the Islamabad MOU.
We will know very soon, 40 seconds until new 15s, if we're going to pop up or rotate down here. Again, we've got our initial reactions. They were okay, but we need follow through below these levels, or we're still just holding higher lows, right? There's nothing that's let us know yet that we want to continue down, right? We're still just holding.
He also adds in the IRNA interview that regional nations have also accepted that Iran and Oman can reach an understanding regarding
He keeps doing that same thing. So again, I want to see us sweep below these purple lines that I put on chart. Because that will let us know that sell side is willing to shift, and we want Russell participation as well. Again, this is already profitable, but I don't know if we're going to get this acceptance below or not. So like Ali, like one of the things that I don't know if you're still here, but like the only time I take trades is if I find someone who I think could potentially be the catalyst for like an offside trader or an exhaustion move in the opposite direction. Like that those are the reasons why I take trades, right? It's not because like we're at a level. It's just like that's where I then look for interest, and then like the reason you have like that's my arming mechanism, right? Like a level, an area.
So just adding context to the last headline that the Iran's Deputy Foreign Minister Garibabadi said, arrangement with Oman does not mean implementing Article 5 of the Islamabad MOU. He says that Article 5 stated that if Strait of Hormuz were to be opened, which was the responsibility of Iran, Iran would take measures to open the strait for the passage of commercial ships free of charge for a period of 60 days. So he's saying that does not apply with the agreement with Oman.
But like then like so like let's say your opening range idea, right? Like so we're at an area of interest that would be your arming mechanism.
Also, he says that in regards to the routes, it says it's important to note that it does not specify how the route should be, but rather that it should be done according to Iranian arrangements.
So like the opening range is your arming mechanism. That's where you're looking for a trade, an area of interest. But then the thing that actually triggers your trade would then be, you know, a participant that you were able to visualize and then be able to trade around, right? That gives you the rationality. That's just an example. So it's like, oh, I see a buyer who's here. Like as long as they continue to be here and continue to participate here, like I would like to trade with them because this is an area that I care about. And I now know that there's someone here who is initiating around this level. I know that I don't move the market, but if I can see this person here and they're willing to initiate and engage, then I'll engage with them because I know that they are capable of moving the market, right? So is there participation at the level that I'm interested in? If so, right, then cool. We now have a reason to be trading. We don't trade a level just for a level's sake. We trade because we're seeing that same participation, those same people, and they're also willing to trade there, right? Is this auction in play or not? It's a really easy way to filter out FOMO trades, because it's like, if there isn't someone willing to engage, then I don't take the trade, right? Because there is no trade. That's step one, right? Is understanding that you don't control the market. You're a one lot warrior, bud, right? Like, doesn't matter. If you find the perfect level on your chart, it matters if the other people are trading around that level.
Is the leader of the Yemeni Revolution Order's general mobilization, and Sana prepares for full-scale confrontation with Saudi Arabia.
Right, so like that to me helped me stop over trading quite a bit and filter out my trades, where now it's just like, oh, okay, I look for a specific setup where someone who tried to initiate, right, tried to engage at a higher high, and tried to force a higher low, failed, right? We have a failed auction where someone is now outside of our range, where they tried to initiate higher, they failed, and then we got back into, business as usual between 2 points. It's like, okay, well, this guy might now be offsides at these highs on this 15-minute candle on ES. That's interesting to me. So if we now see the offer stick below value, right? So like, look at this. This is what we were paying attention to, right? This is, all of this liquidity is above value here, right? That's what that white line represents. So what I'm interested in now is like, if that continues to remain, then that's a potential for downside to persist, right? We just need to see the follow through below, because all of this is showing a lack of interest above. So now I just pay attention to this, and this becomes my risk. And now I'm looking to see if they're then engaged to the downside if these guys continue to remain offsides. So I have an area of interest, right? We have our look above and fail area, intraday bullish above. So I already know that this is an area I want to be trading.
Saudi ships solidifies the equation of siege in exchange for siege. So we have seen this similar comment being made before by the Yemenis, but just in regards to the targeting of a Saudi ship.
Oh my god, this guy's talking so much lately. So like, I could try to engage here, and I could have a limit into 73, sure. But like, what I actually care about is, does this trader continue to remain offsides? Do we never test back into them? And do we continue to maintain below this value line across these candles? And does this liquidity above remain offsides?
That's from Yemen, a member of the Supreme Political Council. Says targeting of the ship north of Yanbu sends clear message that the equation of siege in exchange for siege cannot be circumvented through alternative routes.
Because like, if we do, then this trade is still in play for me. All I need to see then is the ability for us to continue to maintain
Yemen
these
says
highs.
routes that were previously
Holy
considered
shit.
safe are no
Shut
longer
up.
safe based on the developments on the ground by Yemeni armed forces.
Jesus. Then we would need to sweep below this for that continuation down. If we don't get that, right, like, we're still in this uptrend that I was talking about, and we're still just maintaining and chopping, and we're going to exhaust aside, and there's no follow through. So it's like, my risk then for this is this, right? This is what I'm watching for. So my stop is above this wick high.
According to a blog,
I'm looking to
AWS
engage here, and I know I need to take off my first risk here.
Computing research and development.
And I know if we can flip this, then we can then look for rotations further down. But right now we're inside this candle, and I need to be risking off until we can flip and sweep below. Once we do that, then I know that we have an ability to push down further. So like, I've given myself an edge, I've given myself a stop, I've now created a play for myself, and I know that we can then like sweep below, then we're good to go. So to me, that then like creates the full framework of what I'm looking for and where my invalidation is. And then it's not just about like trading around a level, it's like, oh, I'm not trading around a participant. That to me feels a bit more, I don't know, like, it has a bit more substance, and it has a bit more of a narrative that I can play around that is controllable, right? And I can prove when it's invalidated. And to me, like, that means more, because that lets me know when I should exit, when I if it's just a level, like we touch levels 1,000 times, right? So like what's the touch that like actually is playable, right? Like that am I gonna engage at every touch? Surely not, right? Like that's not profitable. So it's like, okay, well, what's going to be the filter or the thing that's going to, you know, change this specific touch from this other specific touch, right? And like, to me, I've never found anything other than order flow and actual participants to help filter out that noise. Because again, like you can put 1,000 charts, 1,000 levels on your chart, and like, yes, price is going to touch them, but was there something that was actually tradable there? That's the question. They're trying to take in size here at 70s, 500 lots so far. This is interesting to me. See if we can continue to maintain, or if they pop it.
Also, according to Tasman News citing Yemen Houthis, say that Saudi Arabia has not yet grasped the dangerous situation it faces, adding that Yemen has exhausted its patience as the situation has become extremely sensitive and critical.
Mm-mm. $550 lots at 69s on the bid. Offers absorbed like 684 lots so far into this 70-72. It's very two-sided. It's lunch. We're just waiting on a directional decision here. I might get stopped out. That's okay. We'll see.
More color now from IRNA, citing Iran's Deputy Foreign Minister Karabadi, says potential transit routes negotiated by Iran and Oman could be viable for 2 to 4 months.
Yeah, they're trying to flip this. But like, see, the thing is, I can't just engage on the stop out of, I get stopped over 74s, which they might do to me here. I'm break even right now on this trade on ES. I'm looking for that wick high to hold. But even if I get stopped out at that wick high, I don't think that I can engage in an active bid until we pop over 78s. We'll see. Same thing on NQ over 40s. It's like this 20 to 40 is where we're looking for absorption to occur, but I need sell side to step down, or again, we're still just maintaining higher lows in the short term. So I just want to continue to see them get like taken in, but then we need to see someone like really actively step down at our low edge, or it's meaningless. So slow, man. Let me see if I can find like a good grasp of graph. I don't know why that was so hard to say. Of risk to ruin. Risk to ruin.
Iran's Deputy Foreign Minister Karababadi says Iran's negotiations with the US are taking place in a context of mistrust, and this remains the basis of the ongoing process.
I found some decent calculators, but I wish they would show like a graph of it. Damn. Graph. Oh yeah, I found it. Here, this is good. Oh, what? This image is so small. All right, sick. New 15's opening now. Still just within our range. Watching to see what we do here. Do we take out highs, or are we able to sustain?
So some more colour from Iran. They say that the new Oman deal is going to close temporary Hormuz shipping routes. Iran's Deputy Foreign Minister says the US returning to its commitments in the Islamabad MOU is a condition, but not enough for reopening Hormuz.
There we go. Okay. So, this is your risk to ruin. What does this chart show? Well, this chart shows that at a 60% win rate, you're guaranteed that over 100 trades, you will lose 3 trades in a row. So this is where you're guaranteed to lose X amount of trades in a row based off of your win rate and the amount of consecutive losses within 100 trades. So if you can see this, if you know what your win rate is, so even at, if you're at a 45% win rate, you're guaranteed and probability wise to lose this many trades in a row. It's part of your system, like we were talking about earlier. Just like I am guaranteed at a 20 or 30% win rate to lose X amount of trades in a row. And if I am over leveraged, right? If I don't have the ability to eat those losses in a row, then my size is too large for the strategy that I'm trading. Do you get me? So like this is step 1. We're winning on the strategy, by the way. Back down to our lows. Let's see if 780 flips or if this is another risk off here. Same thing on ES. Just another rotation down. We need to see a continuation down here for more. Or this is meaningless. But like, is that easier for you to grasp in a chart like this? So then like when you look at your leverage, it's like, oh, okay, what percentage of my account am I risking per trade? Do you know that answer? So like what's 10% of 2000 if you're on a 50K drawdown? Like what is that number? Are you willing to risk 10%, 25%, 50% of your drawdown, right? Of your total account's value? You know, like what are you willing to lose and what's your win rate? Because if you're only willing, if you're trading, you might not even know that you're leveraging as much as you are. Because remember, like 50K isn't the actual account value, it's your drawdown. So you're trading a $2,000 account because your drawdown is $2,000. That's what you have to work with. So you need to then do a percentage breakdown where if you know that you most likely have a 50% win rate, right? Like let's be real here. If you know that your win rate is probably around 50%, you need to be sizing for the potential for the reality that you will lose 4 trades in a row within 100 trades that you take, right? And if you aren't sizing for that, then you will fail, right? You blow up just right there. It is what it is. And that's completely out of your, like, it's just, it is what it is. It's math, right? There's nothing you can do about that. It's just, that's what your win rate is. And you have over leveraged, you will blow up. It is probability, right? Like that is just a statistical reality of the situation. And so if you are not sizing correctly for your trading style, for your system that you're trading, it does not matter what you do, you will blow up. But as soon as you understand that, that changes everything, right? Because now you can survive it because you are now trading something that actually makes sense. You're trading a size that makes sense for your account and for what you're actually, you know, utilizing, what you're doing. And like that's incredibly powerful because that gives you now confidence to be like, oh yeah, like I can survive this loss. It's not a big deal. I don't need to make up for it. I know that this is just part of the process, right? This is incredibly important because now when you lose a trade, you aren't immediately trying to chase to make it back because you know that you're statistically going to lose trades regardless, no matter what you do, right? This is an incredibly empowering point for you as a trader because now you have be like, oh yeah, this is it happens. It's part of it. I'm okay with that. All I need to do is size correctly for my strategy. And I know that over time I will make money and that these losses are going to happen regardless of what I do. And that as long as I'm positioning myself, right, in a way that I can survive these losses, I will be able to over time make money from the system regardless, right? This is just, it is what it is. It's part of it. I just took off my secondary risk here. I'm watching to see if we can flip this from our offer hold at the highs. Just following our plan, right? But like this is when I like talk to you guys about this stuff, this is what I'm like trying to get at, right? Like it's the entire understanding of like understanding and sizing according to your account, right? According to your strategy. And like you can get like a pretty good gauge of what your metrics are, even if you're not journaling yet, by just looking at your performance log.
Iran's Deputy Foreign Minister Garibabadi says Iran has received messages from the US. It's coming from IRNA.
The problem and the reason why I don't think that the performance log is a good tool overall is that I know for a fact that you guys are taking discretionary trades and mixing them in with playbook setups, right? Like I know that you do have setups and you are taking them, but you don't have a way to filter. You don't know what's actually winning, right? You don't know if your discretionary trades are the things that are winning for you or if they're the things that are hurting you. You don't know if your mechanical setups are the things that are winning for you or hurting you because you haven't done the work. By the work, I mean record your trades by type, right? By your emotional state, by time of day. The reason why we do this is so that you can then be like, oh shit, like I make so much more money by trading, you know, the opening range break. And I lose all this money when I try to take trades at, you know, 11:45 and I don't really have a good setup. And I can see this over days and days and days. And it's like, oh, okay, well, I know that like this specific strategy where I'm looking for like this look above and fail, you know, on this specific zone or like, you know, POI really plays out. And, you know, it's been making me money over and over again. And it has a really solid risk to reward. Like those are the things that you're going to be able to find by doing some really basic journaling, by just filtering and tagging your trades, right? Because now you know what's working and what isn't. And then you can then actually be like, oh yeah,
Iran said
this
that the US
strategy
said in
has
its
X
messages
win
that it's
rate.
ready to return to its pledges.
And that's the most important thing, is to be like, oh, I know my opening range break has a 30% win rate overall, but that it's still profitable if I let it play. That's those are two really important things to know. That like the opening range break doesn't win for me a lot, but when it does, it pays, right? Like those are two really important things to know, because if you don't have that information and you think that the opening range break is supposed to play every time, you're going to give up on it before you actually make any real money. You need to know that you potentially might lose, 8 times in a row or 4 times in a row, depending on what your win rate is. And you have to know that that's part of your system, but like that is included, and that it is still profitable, right? You can still make money with it. And this is why that work is so important, is because without it, you're lost, right? You're just guessing. And a lot of it then is going to form by like intuition over time, but you can speed run this process, right? By doing this work, and then it doesn't take you 5 years to become profitable. You can lower that into, a 2 year, 1 year, 6 months, if you really hone in and focus on this, because you're doing all of this work that would be, subconscious, where you're like, oh wait, like I do really well if I trade like this. I do really well if I do, you'll start to gain these same things over time by just doing it over and over again. But like, think about how quickly you could improve if you can rationalize it. You can put it into perspective and then apply a probability to it, and then be like, oh yeah, if I just stick to this system and do this one thing, and I'm systematic with it, like I will make money. And is my goal to trade every rotation and take every setup that I see, or to make money, right? Like, why am I here? Because if you're here to make money, right, then you now have a winning system. You just need to actually follow it. And why wouldn't you if your goal is to make money? Right? So like the way that you do this is the reason you do all of this, the process, is to convince yourself and to show yourself that like this actually is the right thing to do. I am following a system. I am doing the thing that's going to make me money over time. And you have to continue to remind yourself of that this is the process. This is the thing that's working and will make me money. So that when you're like, wait, but what if I took this setup right now? Maybe I'll make all of the money, that's going to then cut that out. I'm not going to want a discretionary trade. I'm not going to want to take setups that I don't understand, because I know that if I follow my logic, I win. I make money. I get paid. That's what cuts out all that FOMO, that cuts out all the emotional part, because I know now with real numbers that this works, right? You've given yourself the confidence now. You know that you can lose, you know that you can win, and that if you stick to something, oh shit, like it's okay, because this will compound, right? If you don't have that, you're trading blind and everything's scary and you feel like you're missing out because you don't know what you're doing. I hope hopefully some of you are getting some like aha moments from this, but it's literally just math. And like, it's gonna feel like shit in the beginning, because you have to like
Iran's Deputy Foreign
look at
Minister
your losses, and that
says no
sucks,
talks with the US have been held in recent days.
right? Like, you have to be like, oh yeah, like I'm an idiot, like why did I do that? But like, that's okay, it's part of it. Like, you have to get over it. If you can't get over that, like that part of journaling, and that's why you're not doing it, because you're scared, right? Like you're never going to make it. This doesn't get easier in that sense, right? Like, you will always lose. Like, again, your risk to ruin is built in. It is baked into your strategy, regardless of what you do. So if you cannot rationalize, right? If you can't come to the realization that you are going to lose forever, right? You will always be a loser. It is just a part of it. Like, you need to rationalize that. That is how you become a winner, is understanding that your losses aren't the full picture, right? It's a piece of it. And it's a reality. It's right. But if you can never wrap your head around it, if you're never willing to actually like accept it and be like, yeah, this is a part of it, and like I'm not, my self-worth isn't based off of if I win every trade or not, right? Like my self-worth is based off of me following my system, respecting myself and my rules, following a strategy, working through the process, doing the things that are actually going to make me profitable, and confronting things that are going to, make me a better person and make me actually be able to build upon myself and my goals. By avoiding these things, I'm not building on my goals. I am continuing to be scared. I'm continuing to not do what I need to do. And I'm continuing to lie to myself. And I know that if I continue to do that, I will never make it, right? Like that's the difference. And one feels comfy short term, right? But overall, you're never moving towards your actual objective because you're not confronting anything. But once you confront it, you can then actually deal with it. And that's what I'm trying to get at, is like, again, you will forever be a loser, but now it's your job to be a good loser, right? Lose well. All right, so this is a pretty profitable trade already. We'll see if we get some continuation, but good hold from our 20 to 40 high. No change there. Went to target, got our nice little breakdown. So this is already pretty solid. I don't know if we're gonna get more. I'd like to get more, but I just don't know. We need ES to give us some follow through here. But just playing off that high, like we talked about with those guys off sides. I don't know. I mean, not much else to do other than just look to see if we can hold this runner. I'm in, I've taken off 2 ES from our highs here, just following our plan, right? And I've taken off 1 NQ. I just have 1 runner left from our 20 to 40 on that high. Nothing crazy, right? Blue is our average, green is our stop. But again, it's midday. Nothing happens. So that might be all we get. I'm not sure. I think I just leave my stop at that right above those highs and just let it play. Maybe. 100% mental toughness and clarity is important. It's not only important, it's key, bro. It's key to everything. Like, it's just like, you're not going to win unless you have... Okay, so like, this is the only way that you win without it, is that you have an unlimited budget and that you can continue to buy prop accounts in forever, and you use your entire drawdown for singular trades, and you win just by pure probability, and you just continue to do that over and over again, and eventually you would be profitable if you had unlimited money to spend on those and you used your full drawdown, right? Like, I proved it to you already that you can make money with a 50% win rate on a coin flip using that strategy, right? Like, you will make money, but the problem is that most of you don't have an unlimited budget, right? And you're unable to do that, and so you have to trade a system that's higher than a 50-50 trade with a $2,000 drawdown per trade. So you have to be way more precise, because you don't have the ability to, continue to reset over and over and over again and continue to, gamba. So that's the difference, is like, if you don't have that, if you don't have the resources to do that, then you have to be more precise. You have to actually treat this as a business. All businesses, you have expenses, right? All businesses, you have a rate of return. And you have to understand that. The best athletes in the world don't, hit every shot. They know how many shots they hit, out of 100. They understand, they practice, they continue to watch tape, they continue to try, they continue to, go for those same baskets and practice and practice and practice, right? They're trying to improve their win rate. They're trying to improve their overall probabilities, and they're slowly increasing them. But like, they know they're not going to win and they don't give up, right? They don't YOLO because they missed a shot. They continue to improve, right? They can continue to be consistent because they know that consistency is what has gotten them to the point where they are. And you have to remember that, like, if you wrap your head around the P&L and not that you're following your process and your rules and doing everything that you need to do, right? This is what we've been preaching for forever, which is that, like, the process is the thing that pays. Like, of course the end objective is to make money, like, let's be real, but remember, like, the process is the thing. You have to remember, like, what actually is working for you. And as soon as you forget that and you start like to really only focus on that P&L, that bad day is going to fuck you up, man. You know, focusing on P&L is great when you're winning. It sucks when you're losing. And again, I've already proved to you that you will lose, right? It is a statistical certainty that you will lose, and you will lose bad, right? You will lose multiple trades in a row. And when that happens and you've been only focusing on P&L, that's when you die, because you've had 3 green weeks in a row and you're not ready to be a loser. You're not ready for it. Your ego can't handle it because you've been looking at that P&L number and you haven't been looking at your process. You forgot that it was part of the process. It was part of reality that you would lose eventually. And so when that time comes, you blow up your account in a singular day because your ego can't handle that you can't outbeat probability, right? You think that you're better than probability. And then that's when you blow up your account. And so like, that's what I mean when I say stick to process, because all of that's built in, it's baked in if you're trading process. But if you're trading that P&L number, you're trading your ego. And you won't be ready on a bad day. You're gonna try to make up for that loss immediately. And then you're done. All of that work that you've been doing is just gone in a singular session because of your ego getting in the way. Yeah, man, you gotta be able to survive. It's the only thing that matters. And I get it. You want to make money. You've got bills to pay. You're doing this because, you know, you've got debt. You've got this or that. Or you want to be able to get your family out of something, or you want to be able to go on a vacation, or you want to stop living check to check. Like, I get it, but you're literally never going to get there if you do not do what I'm saying. Like, it just is what it is. And I'm not even like saying you have to do a lot. Like, this is like basic shit. You just have to confront yourself. Like, this is literally just you stepping out of your ego and being like, oh yeah, like this is reality. Like, I'm not telling you that you're going to fail, but like your chances of succeeding are 0 if you don't do this. Yeah, I don't even know about that, man. Like, I think that most people do align their execution with reality, but I think that like most people are still way too over leveraged and they're not accounting for the losses. I think like that's still most people's biggest issue, is that they want to make $1 billion and they want that $1 billion to be tomorrow. And so they trade like they're never gonna lose. And then like when they blow up and then they have to restart, right? They don't have the drawdown that they need for the reality that they're trading. Or I shouldn't say the reality, the delusion that they're trading. And that's what, like, I see so many people who like blow up and like they would have been fine if they had, you know, much larger drawdown, but you just need to like actually size for your account and size for your losers. The guy, again, like most of you probably have like a 45 to 50% win rate. So if your account can't survive 4 consecutive losses in a row, you will blow up. Like it just is what it is. Like that is the reality of the math. And again, like losing doesn't mean that you're doing your full risk, right? Like once you get better, you can really like how do I word this? You can really start to refine your losers. When you start to understand why you're taking a trade and where you're initiating and the risk that you're putting on for these trades, like think about this trade that we just took here. What am I actually risking into being wrong? Like I'm giving myself such a minimal risk here. Like this is 20 points to make what on NQ? 100 points. And what are we risking on ES here with this wick high? 3 points, 3.5 points. And first target was what? 10 points. So it's already a really fucking good trade, risk to reward wise. And then we can just leave a runner and we can take off into, you know, that 1 to 1.2 to make the trade free. But like if our risk to reward is skewed, you have to remember like this also changes everything, because a lot of what we're looking at is just like a 1 to 1. But if our risk to reward on the trades that we are taking is 4 to 1, right? Our losers will never hurt us if we're always taking trades with that sort of risk to reward. I can lose 4 trades in a row over and over again, but one green trade makes up for all of those losers if I'm trading you know, a risk to reward that's this good. Oh, this is the wrong fucking, like this is something to also think about, is like if this is my risk to reward here and this is our stop and this is what we're looking for, already on this we have what? Wait, did I just do it again? What's wrong with me? Okay, sorry. Used the wrong tool twice. So even just into first target here, we already have a 2.7 risk to reward here. So for every win that I take, right, I'm recovering my loser, my losses. For every win, I'm making up for 3 losses, basically. Even just off of this, just from this model that we're trading. This isn't 1 to 1, right? This is just the rotation that I was looking for this trade with the potential for breakdown and continuation. So we have a fat-tailed trade on our runner, but we've already taken off our initial risk and made up for this with a really tight stop. So you have to also remember that like all that we were looking at here on the risk to ruin chart was probability based off of win rate, the amount of consecutive losing trades in a row, and our current win rate. We haven't factored in yet the risk to reward on top of that. Because remember, you can have a 20% win rate if you're trading a higher RR. If your risk to reward is high enough, you can be a fucking loser, dude. You can lose 90% of the trades you take, but the trades that do win pay and make up for those losses. But you need to understand what you're trading, where you're trading, right? This is why it's so important in what we're talking about, is like that calculation of understand what you're taking and why, and like what you actually need to succeed is incredibly important, right? Like the risk to ruin is the first step of that question. Now it's about understanding, right? Like what happens if I do lose, and if I do win, like what does that look like? So if I'm risking 10% of my capital per trade and I'm looking for a 2 to 1 risk to reward and I have a 45% win rate, what's my percent of ruin? If I know, because again, what's the calculator tell us? Well, it knows that at a 45% win rate, we are bound to lose 4 trades in a row, right? That's what this is telling us. 4 trades in a row at a 45% win rate. But if I'm only losing, if I'm risking 10% of capital per trade, and my risk to reward that I'm looking for on my setups is 2 to 1, my risk to ruin is fucking 0. It's impossible, right? But let's say that I'm looking for a 1 to 1. I'm gonna lose. I lose. My risk to reward isn't high enough for this. I will lose eventually. These will blow me up. Do you see why this matters? So if I'm trading a 1.5, I have an 8% to blow up my account, trading 10% of my capital at a 45% win rate. So you can go through this and understand like, okay, well, what is 10% of 2,000, right? Or whatever your drawdown is for your account. Or maybe you're trading 100K or 25K, and go through this and be like, oh, I can only lose $200 per trade. I need to now figure out how to size into that, understanding that my max risk, right? My max risk, my max pain per trade is 200. Now I need to separate that into, you know, the trades that I'm actually taking and the reward that I'm looking for. But if I actually am following that system, I know that I will win. I don't know, I just looked up I literally just searched risk of ruin calculator. Here. I'll make one of these for TFC. I'll put it on the site so that you guys have these tools. But like, again, like this is like super basic math. All right, I'll give you this one as well if you want to. Right? So like this is like, as soon as you calculate these three things, which is why I keep telling you to fucking journal, is because once you have these numbers, life becomes so much easier. It's much easier to be rational and to understand what you're working with when you actually have the numbers that let you know that you can succeed, you know, doing it. You have to build out the system, right? You have to see your ROI. You have to see, like, businesses don't just trade off of vibes, right? They don't just buy product and be like, yeah, maybe we're profitable, maybe we're not, right? Like, no, they have margins. You have to understand your margins as a business. So as soon as you are able to trade within it and understand like where you can survive, it's like, oh, okay, well, sick. Like I can, you know, have this many losses and I just need to stick to my system and I will pass this account. Like a 45% win rate is less than a coin flip, bro. But you have to give yourself the correct amount of leverage, because a 45% win rate, again, with 100% of risk per trade on your account, you're going to blow up. Right? So like this has to make sense for what you're looking for. If I'm trading 5, right? Like, do you see how this changes based off of this? Do you see like math? Crazy. So again, when I go back to, you know, like that system that I'm building on silver, does this now make a lot more sense of why I'm willing to take, you know, this many losses in a row? Because I understand that my risk to reward here will always pay. If my max amount of losses in a row, you know, is this, I will never actually blow up this account. It will always make money because I'm trading a certain risk to reward that will be able to hold that, right? My profit factor that I'm looking for here outperforms my actual win rate. And so over time, I make money and I can lose this many trades in a row and never have the ability to blow up within my system. And so again, you don't really want to be manually trading a system that has a really low win rate because it fucking hurts. It is emotionally draining. It is mentally draining, right? You want to be trading something that has a bit of a higher win rate than this. But for something that's automated, you don't care. You're not looking at this. It just happens, right? It just plays out. It doesn't matter. You know that over time, this pays. Right? And then you can do things to then modify it so that this becomes more profitable. Right? Like this is a mixed strategy where I'm trading silver and I'm trading gold. And gold underperforms when silver overperforms, and they balance each other out. So I know that when gold is underperforming, silver will carry, and then my average together will go up. And then over time, these two things balance each other out and then create an overall curve that just goes up into the right, right? So one underperforms, one overperforms in different market conditions, and then they balance each other out and then create a more straightforward curve. Right? You can add things to your system. It doesn't have to be one-dimensional. And then I can change the amount that I'm trading, right? Like I'm trading 3 MNQ here, I'm trading 1 silver here. They balance each other out. They have different drawdowns, they have different returns. You create a balanced portfolio, right? This is like a bit more complicated, but these are the things that you can start to do to refine your losses, right? Remember, you're not stuck. It's not static. It's not binary. So like, you might know that you will lose over time, but you can find things that, perform when your losers are losing, right? You diversify. Or you create systems where you are cutting, you're taking that you're half off at 1 to 1.2 or something like that. So then the trade's risk free, and then you can let your runners run, and then you've got large tails, right? And then all of a sudden, like you're changing your win rate and your loss factor when you do stuff like that, because now you're working on your execution, you're working on your actual actual trade execution, which changes everything, because the better that you get at your execution, and the better you and more efficient you are with your stops and with your targeting and with your entries and all of that, right? All of a sudden your drawdown goes down quite a bit. Because again, like you will not win every trade, but that doesn't mean that your losers have to be for the full 10% that you're risking. You're going to start to realize when you're wrong way sooner.
Ron say that no decision is yet made on the second stage of US talks.
Sorry, your max stop out. Like again, if we are trading based off of a participant who's off sides, then we know when we're wrong. It might not be our full invalidation if we see that bid start to step up at the lows and sell side failure. It's like, oh shit, like I know I'm going to lose this trade, because I recognize order flow, and I see that sellers are getting exhausted into our lows, and that we're going to do this full rotation back up. It's like, okay, well, I now know that I don't have to give back all these unrealized gains, because the trade is invalidated based off of my understanding of the auction. I see that these guys are getting trapped into these lows. I see that the buyers are stepping up. So if we stepped up over this, I don't have to give back my drawdown all the way back up to 840 here on my runner. I can stop out of this trade and still be okay, because I see the steps that are going to invalidate me before they happen, because I understand the trade that I'm in. Do you feel me? So like, your losers don't have to be for max size. We're just calculating them that way because we want to be calculating the worst possibility, not the best outcome, right? We want to be calculating the worst outcome, which is full drawdown on 4 or 5 losers in a row, right? Is that going to kill our account? Once you get better, you can start to refine your system, right? You can refine everything, your entry and exits, your stops. And then those numbers can get smaller and smaller and smaller. And then you can then filter it even more by then being like, okay, well, this is my playbook. I'm now systematic. I'm making money. I know that, my system has a 45% win rate, and I'm bound to lose this, X amount of trades in a row. And I don't want to change the trade that I'm taking. I really like the trade that I'm taking. But is there a way that I could weight the setup that I'm taking? Like, surely when I'm looking at this, it's not always the exact same setup. It's not exactly, sometimes things feel better in this trade. Sometimes things have more follow through. Sometimes things give me more reward. Why is that? And then you go in through your journal and you filter, and it's like, oh shit, if I take this exact same trade at 10 a.m. and I take this exact same trade at 1 p.m., the probability of this winning out is very different, right? Like, oh, when I take this setup at 10 a.m., I have a 70% win rate. But if I take this trade at 1 p.m., my win rate is 35%. It's like, wait, if I can filter out those 1 p.m. trades, my win rate overall would increase a hell of a lot. So do I actually have a 45% win rate with the strategy, or do I just need to filter out the periods where this strategy really doesn't work well? Right? And then all of a sudden you've increased your profitability without doing anything new. You've just taken out the bad inputs. And by taking out the bad inputs, you've now erased all the bad potential outputs. You feel me? And that's why it's so important to have that information, is because now you can start refining. And when you refine, you raise your win rate.
you start to then be able to weigh your setups, being like, oh yeah, an A+ setup for me is when, you know, X, Y, and Z are doing these things at this period of time when I have this amount of volume. And then you can be like, okay, well, I'm only going to take A+ setups. And now all of a sudden your win rate is way higher and your potential reward is way higher, because you've now filtered out all of the C and D setups that you were also taking for the same mechanical setup. And now you've raised your win rate overall. Right? Does that make sense? Am I like, is this starting to like make sense to you of why these systems matter and why, you know, filtering out makes sense when you think about this? Hopefully, like, I'm blowing some of your minds today and making you realize that you've like been screwing yourself over and making your life harder. I'm not like saying anything insane, but it's one of those things that once you realize it, you're like, oh yeah, like what have I been doing? What time is it? Is it about that time? Yeah, it's 1:40. All right, let's look at our chart here. What do we got going on? So we are within our balance from yesterday. We're holding where we need. We have not done the downside pathing at all yet. We're still sustaining. What we're doing is we're building out a composite node here is what it looks like to me, which is good. It's a good thing, not a bad thing. This still tells me that there's potential for us to go up. What I mean by a composite node is that this node from yesterday where we closed is still being respected, and we're building it out just a bit further, right? So between these two sessions, we're creating a larger balance here that we're respecting. And we're now creating a new area where price can rotate. And once we actually confirm, right, above or below, we will then know where we're going to go. Very clear where we would go on the downside if this broke, right? We would just come back down to value of the previous day after failing this node up at our highs. Short term, right, we're just coming back up to POC from yesterday, which is that Deepak here. We're looking to see if we can sustain. If we can sustain, then we know that we're headed up to this value high here into our look above and fail and our VWAP that's been controlling our downside move, right? So right now we are actually a trade is a setup is printed here. The stop is here at 56. Entry is here at this. All right, let me zoom in. I didn't realize that this actually called something. This is entry here. 770, stop 56, target 98. That's what this is calling right now. See if that actually plays or not. I think you probably are better off waiting for a flip of 74 personally, but this looks okay, honestly. What you're looking for is, can we hold POC here on this node? And if we can, this would be target 1 in my opinion. And then you'd be looking for this to flip for target 2. Right? Your risk right now is more so in reality this. You don't have to play it all the way down to here, because if this fails, you're going to come down to these lows. So right now you're looking to see if this will rotate up to this pivot, and if we flip that, then this would be target 2 and this would be target 3. But right now it's just balance. And again, it's really important that we show interest over our gap and yeah, yesterday's POC. So as soon as we get above that, you're going to feel much more comfortable in this. But if this fails, right, we're more than likely going to come down to these lows first and then maybe figure it out. But yeah, this is my guess. My guess is that NQ will try to bid here with ES, and that we will try to at least come up to here, or Russell will come to VWAP and reject us before we get here, and then we'll figure out what we're going to do. But to me, I think Russell's probably going to go up to 44s regardless before we get our next leg down, unless something drastic changes. That's kind of what I'm seeing on RTY here. Is that it wants to come up to this VWAP up at 44, 45. But we shall see. Nice little reversion trade on Russell based off of PVZ here. Just rotating up to target 1 here into PVZ value low at our 39s. No invalidation yet on ES or NQ. ES looks much better than NQ. NQ is lagging. It is definitely the one with the most sell pressure right now. With Russell pushing, ES is stronger, of course. We see that ES POC is already shifted down here. So what we're going to be watching is if ES can maintain this POC shift that we did, and if it can, on these retests on the look above, it'll then look for that upside target with our POC shift being your upside, right? If Russell can get follow through. Yeah, I don't know. I mean, we'll see. I think that NQ has to find a low, and Russell needs to show interest over 39s for upside. But if we can do that, then I would say that you probably have a right side of V on your hand. Until then, you're gonna get chopped the hell up unless your stop is like what's on ES right here, right? The stop is at 56, so it's a 10-point stop right now on ES. NQ still, look at the difference in structure on NQ compared to ES. We are Russell dependent. We need NQ to find a low, and we need ES and RTY to continue to maintain where they're trading. If we can get that, then we actually have potential. If NQ continues to do this downside, and we can't sustain lows, then I don't know. I think what you're looking for is this to trap on this look below these wicks, get back in, and then show interest over 800s. We show interest over 800s, I think you're good to go. Something like that. And we just need ES and RTY to just continue to do nothing while this is happening. Because as long as they're stationary here, and NQ finds that low and traps, then we can then look for when they're all moving together to then push back up to these targets. That would be my guess into end of day, if it was going to find a low. If not, right, then it's just more of the same. You're just looking for someone to get trapped into these highs, offer to step down below, and then rotations back down to our battle line. It's going to be dependent if Russell can continue to push or not, I think, and if NQ can find this low. If RTY can continue to do what it's doing and head up to VWAP, and NQ can trap someone into these lows, then you're good for upside reversion into end of day. If Russell can't continue and NQ continues to be weak, then it's GG's, continue down. Hopefully that makes sense. Again, I mean, ES looks fine. You're just dependent on NQ trapping into these lows, and then Russell heads back up to a 44, 45. Regardless, just back up to VWAP. Yeah, we're trying to, again, we're building exactly where we need to, which is yesterday's node. We're building out this structure, and this is going to become a new balance, almost certainly. Which makes sense. Like, look how fucking thin this was yesterday, man. It was insane. I mean, this profile is, like, these profiles are trend days, right? We're not revisiting any of these structures. And you go back to, like, what our balance profiles look like. They're, like, way more confident in our move down when we were one time framing down. Much more structured, much clearer rotations. And then, like, on this one time framing up, when we stopped the downtrend, like, we had a good base profile here, but since then, like, look how thin this is. It's because we haven't been coming back down to retest, right? It's just one direction. And again here. So this is like our first real day where we had a double distribution. And again, like, this is turning into a singular distribution on our composite. It will, where, like, this is going to be one profile, which is what we need. We need structure when we're going up so that we can sustain the move, right? To then build with the base. Like, we can go all the way down to here, and this would be our end of our one time framing, technically. Technically, you really wouldn't want it to go past this gap, but, you know, this is our value right now. So as long as we're above the ceiling, we're still in an incredibly good position for continuation. That's kind of the idea. So our ceiling represents where value was found in our previous auction, or our previous balance, I should say. And as long as we're maintaining that, the upside potential is still incredibly high. You can see, like, what this says here is the ceiling is what our old floor, our current floor. No, how do I word this? Here, let me scroll to the left so this makes more sense. This used to be the floor of our previous balance. It is now our ceiling of this downtrend move, the secondary sell. Do you see how this is the balance that we were in before? And this was the floor where we were reactive. So if we're maintaining this, we know where we're headed potentially, right? Into these highs. So this floor here is where value used to be. This was the base. I hope hopefully that makes more sense, right? So this is, we've recovered this balance that we're now currently trading in. So we could come all the way back down to 400s and I would still be bullish, because this would be a retest of this balance. What we need to see is the willingness to expand above this, and then we can keep going. So if we open or close today above 80s, that'd be super good for us. And then we could keep going up. And then we'd be targeting, right, like these highs into 600s, these highs. Right, we still have structure that we can play with on NQ. It is lagging behind ES. ES made new highs, right? Whereas NQ has this really great structure that we can use to inference all of our trades on ES. I don't trade TPO. I only use a couple concepts from TPO. I trade auction market theory, but mostly volume profile mechanics formula. I don't think it would take you too long to learn the concepts. We have tons of material covering them. The concepts are pretty basic, but applying them and becoming profitable is a different story, right? It's a lot of what we've been talking about. Like, your execution is still is a completely separate, event from learning a system. But the system is relatively easy, right? It's very rule based. Yeah, like, again, like the system that we use is a framework to then it's about, I would say, 80 or 90% of
the system, and then order flow is the last 10% that actually gives you your execution layer. And I think that the order flow part of AMT is a bit harder. It has a bit of a larger learning curve, but the rules and the laws of AMT are pretty easy to learn, because there's just so many books on them and so much material covering it. The part that's nuanced is the order flow, and that takes a bit of time to learn, sadly, because that's just screen time. It's very hard to learn like DOM and footprint mechanics without like just witnessing it over and over and over again. Yeah, the execution layer is the tough part. The AMT part is relatively simple. You have like 10 laws that AMT follows, that basically becomes your foundational model of how you think price moves within the market. So I don't think it would take very long to learn, but like that's a separate question from then being like, learning is easy. Executing and applying in real time is hard. I think you could probably learn AMT and be able to go back to previous auctions and be able to name all of the components and what happened from previous rotations, but to be able to see those rotations in real time would require a bit more experience. It's just practice, right? Getting that visual library up, your pattern recognition, and your understanding of the concepts of like, if this happens, then look for this, right? All of those. But once you do, right, like it's really not hard, right? Like here, like these are your basic rotations on AMT for the most part. Here you go. Oh shit, of course it's too big. These are like the basic concepts of the auction. Right, so once you learn these, you're in a pretty good position to then be like, oh, okay, now I can work on the order flow layer of the execution, right? Your execution layer. Once you understand where price rotates and how it rotates around nodes, then you look to at order flow at these edges, right? At these rotational pivots. And then you're looking at that as your execution layer to apply on top of this to know which one to follow through on. Yeah, right. So like if you can memorize this and what price does within a structure, right? Within a distribution, this is a really good first step. And then you would apply your execution layer on top of being like, oh yeah, I see a trap trader outside of value. I see the reoffer, right? Like I see the reason why the rotation through our value makes sense, or why the failure makes sense, right? And then it's like, oh, okay, now I have an understanding of what I'm doing and why it's happening. I hope that makes sense to you. But yeah, like I think you could probably get by with no DOM, only looking at footprint or like delta bubbles and using AMT concepts. You definitely miss some trades that you see on DOM only, or you see DOM on DOM first, that would move a bit too quick compared to having to wait for your delta bubbles to print, or your footprint setup to play out in real time, which is fine. Like, again, you don't have to play every rotation, but I think you could probably get by and be profitable just by using delta bubbles and AMT concepts. Probably. Yeah, I've got DOM on another screen. And footprint and all that. My DOM takes up half of a monitor, so I can't have it on both.
But like even on like here, like this is my DOM. Look how gigantic it is. Comparatively. That's why I said I like not adjusting size. Like this is how gigantic it is. You can see like how big this node is that we're currently traversing comparatively. But like that's like on my other monitor, so it's huge. But like I'm able to see the distribution on the DOM itself of the same volume profile that we're trading, right? The same node. And then I'm also able to see like the bid and everything else. And then I just use like our plan, right? The structure based off of what I build. And then I'm just executing off of that. Plus then just if I ever see like big participants. But I'm not really a DOM trader, to be honest. Not, there are definitely people who are much better than me at that. But I think where I excel is, rotational. I think I'm very good at finding value and finding our edges and where current participants are located, and then executing around them. I think I'm very good at that, and I think I'm very good at spotting early offside participants on footprint. I think I'm very good at that. I think other people could probably do the same thing just with the DOM, but I haven't put in enough reps because I'm too focused on the charts and navigating. And if I was only looking at my DOM, I probably wouldn't be able to talk as much as I do with you guys and do like the pathing and whatnot. So I look at more of like a historical representation rather than live. But yeah, no, I mean, you could definitely learn all of this pretty easily. It just depends. Like the biggest issue is like, where are you coming from, right? Like what were you trading before? Because some of these concepts are either going to be very counterintuitive or are going to be a mixture of things that you probably have already learned, but with a different name. You know what I mean? So it just really depends. Like a lot of ICT concepts are just this, but wrong. Like he just like took a bunch of like Wyckoff concepts and order flow concepts and then like tried to merge them into one system, but like refuses to use a volume profile. It doesn't make any sense. So like he has like some really good ideas and he's implemented some really like solid structures to play off of, but then is like completely like bastardized like the reason why they're good concepts. I don't know, it's really weird. So it just like really depends. But if you're coming from like a Renko system or something like that, then this would be like really new to you. Or if you never look at volume and you're only like a price action trader, like a lot of these concepts would be like, what? What are you doing? It just really depends. Just EMAs and orbs, FEGs, yeah. So you've got some like ICT. FEGs are like fair value gaps are literally just like an order flow mechanic that he bastardized. So you've got some of you understand like it's not a bad starting spot, and like with EMAs, like EMAs are good to let you know like momentum and give you an understanding of like overall direction. I think that can be incredibly useful. I would probably replace like the opening range with like IB, maybe initial balance. Or like I use an opening range as well, but it's 30 seconds. I don't know which one you use. Like 15 or 30 minutes is probably what you use, I would assume. Those are the more standard. Yeah, 5. Okay, 5 or 15. Yeah, no, I mean, you don't have a bad starting spot at all. It's not bad. I would just, like, the first thing that I would implement is I would look up volume profiles and like what a distribution is, and the understanding of, like, the biggest concept, or I guess the most important concept, is the understanding of price rotates between, you know, a buyer and a seller, or buyers and sellers, if you want to put an S on it. And if you can see the market in a structure of, you know, a premium and discount, or you know, overvalued and, you know, undervalued, right? You can kind of create a framework of what price wants to do. If we can then create, like, I know exactly what I'm looking for if I put a VP on this, and like where I'm looking to fade, and what rotations are supposed to occur, and what I want to see, because I understand, like, in this consolidation, what's happening and where I want price to rotate from here. Like, we can see two very clear distributions that are trading. Like, I go like this, and be like, oh, okay, each one of these periods of consolidation now gives you an understanding of where we could go and where price wants to go, right? So like a volume profile shows you where 70% of the volume for a given period has traded. And then this POC line is telling you where the most volume has traded, right? So it's your point of contention or your point of control. And this is where the most volume for this volume profile has traded. And then your value high and your value low are showing you where 70% of the overall volume has traded, right? And that's what we can perceive as value. So when we are able to sustain above value, right? If we go back to that sheet that I posted earlier, this is a really good sign of a potential expansion. And it's like, okay, well, where are we going to expand to? Where are we going to go if we're now showing interest outside of this auction, right? If this is no longer fair value, where buyers are willing to, you know, buy these lows and sellers are willing to sell these sell these highs, what does it mean if buyers are now stepping up and they're not seeing this is value anymore, but they're now willing to buy where sellers were before? Well, it's like, okay, well, where was our previous auction above? What happens if we were able to sustain up here now? Well, we'll probably go back up to our previous auction and try to enter back into that. Because if they're trying to shift value, if buyers are now willing to buy up here, that means that they think that we're underpriced, right? And that price can go up further. So they are going to try to push price. And we know if they can successfully hold this edge, that they are going to then try to look for us to head back up to this previous auction or this previous distribution that we traded. And we know that if they can enter back into that auction, that then we would rotate through it, because we've then shown that this is now the low, where value
Microsoft's
is being perceived,
AI sales
right?
mostly come from OpenAI, according to disclosures show. Microsoft says OpenAI sales were $24.1 billion in the fiscal year 2026, and Microsoft disclosures suggest OpenAI is about 70% of AI sales.
So we now have like a full framework of what happens if we're able to successfully hold, where we're going to go, what we should be looking for. And then we also have a framework of what happens when we fail, right? That's also in the model that we've drawn. So we know what the dynamics are. If buyers fail here, what are we looking for? Well, we're looking for then a retest of our value edge from bid at our POC, and then a rotation through value with this liquidity then trapped, right? So this gives us our entire framework, and we know if this liquidity is trapped at highs and we hold this right here, that we're then looking for not only a break of this low,
OpenAI sales
but
were
a take
$24.1
of
billion
this low.
in the fiscal year 2026.
And then the way that we then build around this is then we use order flow, right? We use a secondary system to then let us know if this is going to hold on this edge or not. Because right now, this is just an arbitrary level where value has been found. And we can see that these edges on the looks out have been a fade, and then we've rotated through our value structure and gone to the other side over and over and over again. So we need something secondary to let us know if these edges are going to hold or not. If we get back in, we know we rotate through.
Microsoft extending dropped session low of 1.5% now.
That's what the rules say as well. The only way that we don't rotate all the way through value is if we see a strong reaction at POC. Then we don't need to do a full rotation. That's the only time. Again, we can go back to our cheat sheet and it'll tell us the same thing. Is like we know exactly what we're looking for off of a failed breach, right? So this again gives you your entire framework. This is what I'm talking about. If price reacts strong from POC, then that can disrupt rule 1. Rule 1 is if price accepts into a balance area, it is likely to revert to the other side of balance. So now we have an idea of where we're going to go, where we should be taking off our first risk. You can see that we usually see a reaction at the mid, right, at the POC of our distribution, regardless. If we then reject our value high, we can then look for that rotation through. If we see an incredibly strong reaction here at the mid, and then we're able to push above value, then we wouldn't be looking for the full rotation back through. So now we have our understanding of where we could go. Again, and then we would use our execution layer to then build upon that. So now we know what to look for here as the next step. So yeah, okay, well, I know that if price now rejects here off of bouncing our mid, that we're then looking to go to our low. If it fails to show a really active bid that steps up here, then I do not want to be looking for a downside move because I'm seeing strength here and I'm looking to then look for a continuation instead, because we did not need to come back down to value. We did not invalidate. So I'm looking for them to absorb here now on our order flow layer, or a flip and then a very clear secondary bid that steps up and excites us. And then this would be our order flow layer, where we're now looking to see, like, can we now sustain a lower high outside with these guys now trapped outside of value, right? So on our order flow layer, we would then be looking for sellers to basically continue to take in here. And the reason why we want to do that is because we want to see what? A lower high, right? We want to see the beginning of a potential downtrend, which would be a lower offer on price, and a willingness to not have to come back up here. It is a willingness to defend. And if we defend, then we would rotate. If we succeed here and we don't see that absorption, then it's probably not worth the trade. So again, that's why it's like we AMT becomes our system, right, that we trade around, and then order flow becomes the execution layer that actually triggers a trade. Because again, every rotation into a level is not something that's tradable. That is noise. You're not going to make money. It's going to just continue to go up and down, and you're just going to be break even. We want to see very clear rules being followed, and we want to see participation where we want it. And if we don't see it, then you don't take it, and that's fine. But like that's kind of like the system. And again, we know where we're going to go. We know that if they don't want to hold this and we flip above, then we're going to be looking for this to break out. And then this is where like your order flow layer comes in. It's like, oh, okay. Well, what happened at our lows? Where is liquidity trapped outside of value? Do we have a very clearly defined value at our highs? Do we have a very clear value found at our lows? To me, it's like, okay, this liquidity is absolutely screwed in our lows. We can see all of these offside participants outside of value. These are the value lows of our candles. All of this is red deltas. These are sellers market selling into these lows and failing, getting absorbed by passive buyers. We now have a passive seller who's absorbing these bids into our high, but it's a very different reaction from our lows to our highs. So to me, this is meaningful. If we can see a buyer step up after a strong move from our POC and now hold here, I think we'll probably traverse this entire range above us. So I'm now looking at our footprint and being like, wow, we held where we needed to. Look at, we held POC of all of these candles that created this overall distribution. And we're now seeing an active bid hold this and now try to step up. So if I can see a secondary buyer here, I'm pretty excited that we're going to at least rotate up to 810, 800. So this is now where I watch to see if we can hold, and I'm going to look across our board and see if that setup makes sense with the whole market. Are we participating? Are we going to go up? Are we going to go down? Are we able to sustain? And this is that order flow layer where it's like who's offsides and where do we need to defend? And this is where it becomes a bit more nuanced, because in the beginning you're just like, oh yeah, I'm gonna fade every edge, I'm gonna fade every push, and then it's just like I'm over trading because look at all these attempts. Like, I don't know if it's gonna go up or not, but now this is where I look to watch to see if we can engage and defend. Are we actually gonna see something on order flow that supports the idea that we're willing to hold? We know with our AMT concept that we got a decent bid at the lows, right? That POC held, that was good. So we didn't want to fade or look for that pushback down to value. But now we need to see a very clear secondary buyer willing to defend these value edges on footprint. At least for me, that's what I would want to see if it was going to do something new.
According to Yemen Houthi spokesman on X, the Yemen armed forces were able to target Saudi oil tanker Daisy in the Gulf of Aden using ballistic missiles.
So let's see what we do here. I am watching. This is like one of the lowest volume areas that we're trading right now. So I don't know if we're going to actually be able to get a breach, but we can watch for it. I'm watching our order flow now. Seeing if we get an entry or if it's another fade off of a failure to actually find secondary buyers to do something. And again, like we've just created a full plan of what we want to see if we're going to take a trade. That doesn't mean we take a trade. A lot of our time is just sitting and waiting for the setup to fully play out. We've now like we've narrated exactly the spec that we want to see. We've shown what we're looking for, who's trapped at what points, right? We know the overall value of where we're going to trade if these failures continue to happen. And now we just pay attention to our edges and look for those setups. And the setup might not occur, and that's okay. It doesn't make us lesser.
So Yemen armed
It's just a
forces
framework.
say that they're meticulously monitoring all movements of Saudi oil tankers and will not allow any ship to pass, whether from the south of the Red Sea or from its north, until our people's legitimate demands are met and siege on them is lifted.
Nothing for me yet. I still think upside's probably likely here if ES can continue to maintain this developing POC at our lows. We're just waiting on NQ to get its shit together. Another bid from POC, very strong, still willing to defend those lows. Sellers still off sides. ES still maintaining higher lows from that. NQ, another big pop, but still maintaining this passive seller who's taking in size here into 780. Looking to see if we can actually finally get that guy to step up. If we do, again, I'm looking for rotation to like 810 or 820. I just need to see like an active bid actually start to sustain here above these value highs. And like, here's a really good example. How do I do this? Like, this is what I look for. I want to like show you an example of like what I'd be looking for in order flow, but nothing, of course, there's nothing here right now because this is garbage. But they're trying to sustain. If something comes up, I'll print it. I'm just waiting right now. Oh, you know what? I can see it on MNQ at least. This isn't bad. 1 second. So this is what we know is happening right now. I wonder if this is going to be too large. Let's see. Okay, I'm going to put this next to our footprint chart so you have both views. And then I'm probably going to dip out after this explanation because I don't want to be here for the full session. Is this too big? Of course it's too big. God damn it. So my streaming monitor is the lowest resolution. All my other monitors are 2 or 4K. So that's why, because if you try to stream on 2 or 4K, everything is way too small. You can't see anything. But when I try to paste things from those monitors, they're always too big. So I have to reformat this real quick. 1 second. Just so I can show you what I'm seeing. Okay. There we go. So like this is one of my order flow charts that I've got on. This is just regular candles with delta. So delta is showing us, it is recording the market buyers and the market sellers. So when you market buy, it is going to show people who have basically pushed over the spread on the DOM, and it will show you the people who are, you know, quote unquote aggressive. And the passive people, right, don't show up. It's only the people who have market ordered in and are pushing to the other side. So when we don't move from aggressive market orders, that's a lot of effort that's being exerted, right? People who are market buying in, willing to buy at any price at any given, you know, the best price at the time, and they're not willing to come back to pullbacks, right? They're trying to break us out. So when we see stuff like this, where we're not being able to do much, right? There's a lot of effort. These blues are market buyers who are buying into the highs, and these are market sellers who are selling into the lows, which means that there are passive buyers and passive sellers who are taking in or absorbing these market buys and market sells. So all of these sellers who are trying to sell, they're pushing, you know, market sell at the bottom, trying to break us down, are getting absorbed by the buyers who are on the other side of the book, who are passive, who are sitting there. So all of that size is being taken in. So it's a lot of effort and not a lot of reward that's currently going on right now. So what we're watching for is who is going to be able to win this fight out. And you can see like these sellers are getting absorbed at higher and higher prices right now. Whereas with NQ, the buyers are getting absorbed at the exact same price. So there's a lot of effort being put on right now to try to raise or make higher lows here and absorb at a higher point. So if buyers fail while also pushing the price up, right? This could be a big problem because they're now willing to absorb or change where fair value was within even this range. Does that make sense what I'm saying? Right? So this is where they were finding, this is where passive buyers were sitting before. This is where sellers have been sitting and continue to sit. What's different about this? What does it mean if we're now willing to take in size up here? Well, buyers are really trying to shift value, right? Where they're condensing it. But what happens if buyers continue to just get absorbed here at the same place, and then these passive buyers who took in all of these sellers flip off sides, and then we push below them? Well, now these buyers are off sides in the middle of our range, right? Compared to these lows. So now we can punish at 2 different intervals potentially. Do you feel me? Do you get that? Right? Because they're trying to shift value. So now we have a new point of interest because we now have participation in the middle of our range, not the edges, right? We're seeing a balance shift trying to occur where this hasn't changed, but now this is now serious. This now becomes a really important pivot for me at our 760, 755 area. Because if they re-offered this and this liquidity continues to maintain when trapped off sides, and then we hold this, I would expect a much stronger reaction on the next push down that we do based off of that. This is where we're now, like, the new battle is like, are we now trapping here? And then can we then pop above this from this hold? Or is this now going to be our flip point where we put in a lower offer after maintaining the same seller at highs? So to me, this now becomes incredibly important. I mean, we'll see if that actually plays out. But if we were ever going to break down, I would expect that that breakdown would occur on a retest of this pivot and then a very clear rejection and then continuation. So this now becomes my pivot for downside. If it was ever going to be valid, I'd be looking for a pretty clear rejection of this level, from the other side, like this, from a retest of our low balance, and then a rejection of our mid. Why isn't that? There you go. Like this. And then I'd be looking for that secondary leg below. This would give me the confidence to take a short, because now we have guys who are trapped in the mid and our sellers are still at the highs. But the same thing goes for the other side as well, is that these guys are still being absorbed right here. So if this continues to hold and then we take out these highs, I'm way more likely to then look for this rotation back up here, because this is us now raising the low of our auction, absorbing at a higher point, a very confident buyer who stepped in, right, to raise the higher lows. And is then I'd be looking for these delta bubbles above this guy, and then like very active on this rotation up. And then I'd be looking for basically like bubbles as we are pushing to then rotate back up into these highs. So I'm using like AMT concepts to frame it, and then I'm using auction market at our edges to then give me an idea if breakout is likely to happen or breakdown is likely to happen, or just more of the same, right? That gives me then confidence to be like, oh yeah, like this is the difference between me, you know, flipping a coin to let me know if we're going to do another balance rotation or not, or if we're actually going to break out, right? It gives me my edge. I don't know. That might have been really confusing, but this is kind of how I look at it. And this is why I said it's a lot more nuanced, because when you're trading on a time frame as small as, you know, like the 30 or 15 second for this kind of structure, it requires you to have a pretty good understanding of like what actually a trap looks like, what's something that moves the market, you know, like what's good volume, what is good size, what's good speed. And those things require a lot more nuance to let you know, like, oh yeah, like this makes sense for, and this is what I'm watching for, and this is the speed that I like to see for this setup to occur. This is the kind of absorption I like to see for this time period. A lot of this stuff doesn't matter as much if you're doing a higher time frame, because you have a larger aggregate of those participants at any given point. But to me, it's like, oh, that makes sense. Where it's like we're defending a higher low. We're looking to see if this bid can now flip. I'm now watching to see if we can get above value of our previous candle. If we can start to sustain, we know that sellers are trapped into this low here, like we just showed. And that then we're looking for a active bid to then step up above this value high to then breach us and rotate us back up to that 810, 820, which seems pretty likely as of right now, but we'll see. A lot can change when we're this slow, which is why you want to see the order flow give you the clue, and then you would love to see like full market participation as well to give you the confidence. But again, like everything is just like telling us that basically buy side is defending this low, where we're holding the higher low, and that sell side is having a really hard time, which would then allow for this rotation to go back up, right? On the daily profile, this is the distribution we're trading. So it's very hard for me to take a short here, because we would only be going down to value low. Is that worthwhile? Is that worth the risk of trying to take a short here when our upside target would be our value high? Or does it make more sense to wait to see which way we're going to breach and then look for that secondary trade on the hold of our value low on the daily for a rotation back down here? So to me, the only option, if I'm not already in a short, is looking for this long opportunity until we can breach and hold below our value edge, because the risk to reward just isn't worth it for me, based off of, again, like our concepts of where we're currently trading within price. And I know that we are at the low of value, where I know buyers are looking to push price up. So trying to take a short here seems really bad for me, risk to reward wise. Whereas if I waited for the breach and look below after failing to hold POC and then holding value low, that would be a good sign that we wanted to continue down. So to me, this is a much better setup to look for than trying to short while we're holding our low after a bounce at value, and now holding POC as supportive, which is this orange line. So to me, it's like, that doesn't look great yet for a short because of that. that's kind of like the idea. So now I'm like, oh, okay, well now we have a very clear balance where we're barcoding sideways at POC. Now I just wait to see which way we're going to break. And if we can start to break this downtrend, I know where we're going to go on the daily, right? Because then we've shown that we want to hold POC, we breached the downside. And then it's like, I know that we came down to our value low, bounced POC. Now I just need to wait for us to recover this. And then target 1 is our VWAP. And then target 2 would be our value high for a traverse of our value range after showing no interest to push below. That to me makes way more sense than trying to do anything else. And again, like this of course could fail, right? Like we might not be able to get this breach and sustain above. And then again, like the idea would be that we would just retest our value low and then figure out what we want to do from there. If we like retest our value low and then rejected POC, then again, I have a downside plan that I'm willing to play, but it has to meet my criteria. We have to show a sustained push below for me to take this trade from where we're currently trading. It just doesn't, the risk to reward doesn't match right now. Right, like this would be the short logic. I don't know, maybe like something like this, which like is still could be profitable. But I like the idea that this could potentially be much more profitable if we can get this upside push. Right? Like that to me seems a bit better. If we can hold here and then look for that pop above, then we have a much more upside potential on a break of our downtrend. If this doesn't want to hold, I will play the secondary on the hold below this value. And then I have really nice targets to play down to 580 that I would do. And then that's a much better risk to reward to me. Because I know that if we hold this value edge on retest,
average WTI crude September futures settle at around settle at $75.22 per barrel, down 55 cents at 0.73%. Diesel September futures settle at around $3.79 a gallon. Gasoline September futures settle at around $2.83 a gallon. NYMEX natural gas September futures settle at around $2.68.
So nothing new, nothing's changed. We've just continued to fail. It's about that time of the day, right? You'll probably get a nice little movement relatively soon here. But I'm just watching for someone to get trapped on either one of our edges. So far, our offer is holding, no change. You should come during the mornings when we actually have like real volume, and then participation will actually get follow through for this kind of stuff. But hopefully some of these concepts of what we're looking for and if it plays out are at least helpful to you. So like all we've done is trap and fail to sustain above, and then sell side initiating, trapping that liquidity like we talked about. So to me, I would need to see a retest if I wanted to take a short here. I'm gonna take another screenshot real quick so that we can see the same thing that I was just showing before, but now with our delta profile, because I was yapping instead of trading. Here. This is now incredibly important. Look at what happened. Where did we start to initiate? Where did sell side really try to slam? It's below this guy, right? So this, again, it becomes just an incredibly important pivot for me of why I care. Because now we have these lows and we have seller side trying to initiate. So you have two potential outcomes here. We are able to absorb, and we see some blue delta bubbles here, right? Where basically buyers now fail to get us back above this. And then we continue down. And then again, we're going to our daily value low if this holds. Or we trap this liquidity off of a failed break and we exhaust these guys, bid steps back up, and then we're going to rotate back up to this participant here. And then we make a decision where then this then leads down after we come back up to this auction, or we'll then do the full rotation back up to these highs. So to me, I now watch these two areas quite earnestly, because if we can absorb and defend this edge, then we get a really nice expansion potential downwards. So like what we're doing right now is exactly that. We're trying to absorb here into these lows. And we have this big, massive seller that's going to try to defend on these retests into that. So let's look at our footprint here so you can see it as well. We have a very clear value edge here where we need to breach above. We have buyers trying into this low. They're currently being absorbed into 740, 735. We're going to continue to see if they can hold this. If they can, we're looking for trapped liquidity into this, and then a very clear sweep and then continuation would be a push down to here. If we can flip back above, then we'd be looking for a rotation back to this guy here. I gotta thin this. Watching now. All right, so if they're gonna do it, I'd expect it to happen here. Right now, bid is defending 35.40. It would have to flip back below that, trapping this liquidity here into 45, and then re-offering. I need to have the smaller time frame on so you can see this re-offer on this as well. So you can see it on both footprint as well as our 30-second. So you see that bottom of our balance here where it's trying to take in size, and then we can see the actual footprint levels the same. So let's see if these guys fail and then we do a full rotation through, or if they can sustain and then re-offer. This will be my last trade regardless. I gotta go. I'm gonna be here for the full session. Looking for absorption here if they're going to do it. And then we would need to see a very clear sweep back below, trapping this liquidity, or we will do the full rotation back through our balance back up to 780. This trap's got to be clear, and we have to flip back below 735, 740 for downside, or they will try to defend with a higher low there. I'm just going to mark that level so you have a visual aid. This is where I need to see price flip from a hold here. It's going to go down. If not, that will be where we will look for that bid to try to defend. This is where we watch to see if buy side defends the higher low or if we can flip and hold. Be your first risk off if you played off of your value edge here. We watch to see this 35.40 to see if it's interactive or not. It has to flip below and then sweep for more. Or I expect this to continue to try to be defended here. Watching. Need to see this flip.
Brent crude futures settle at $79.45 a barrel, up 9 cents or 0.11%.
Holy. Can we make a decision, please, so I can leave? Continued bid at our 35.40, failure to shift below and sweep back up to our pivot here at our value edge. Buyer in control as of right now, held value on open of new 15s, incredibly important. So no shift below. Now testing back into our value edge after sustaining that higher low bid where we thought it would be. Never got the short validation. Rotating up now into first target from that at 60s. Need to see a pretty clear reactive bid here. Needs to be able to flip and then we rotate up. If not, this is where we watch to see if they'll trap again. Needs to show interest here. POC, hold value, rotation up. All we've done is prove that this bid is still willing to defend
Iran's
this
President
edge.
Pezeshkian in State TV says interactions with the nation's supreme leaders are very difficult currently.
No change as of yet. Same rotation, same everything. Good hold so far. Another full rotation on ES. NQ now battling with POC, trying to hold value. See if we get the full rotation up. Buy side trying. So far being absorbed into 60. Watching our retest of our value of our previous candle as we come back down. See if we can rebid here. Or if that's that. Holy shit. Can we do it so that I can leave? I don't want to leave before this trade happens. I don't want to leave you guys like that. There's our. I just need to see either the sweep below 35s and holds for shorts, or this bid to step up here from our hold of our 35.40 and then flip over 60. That gives us upside rotation off of a failed breakdown. But either one, I mean, we have very clear guides of what we want to see happen. Neither has as of yet. Just our offer has held POC to value low, which is a good sign, but we need follow through. Without follow through, then it's just going to become a trap as soon as liquidity steps back in, which will probably happen at 3, which is very soon, 8 minutes. I was hoping we were going to get it before that so that I don't have to stay that late. But right now, like, again, like all we've done is sustain our lows where I said we need to sweep below. And that's it. So until I see like an actual step, I can't really do much with this. Whole bunch of nothing. Yeah, but I mean, we're setting up. That's the problem. It's just that we don't have follow through yet, but this will be our next leg, regardless of which way we go. We just have to be patient. You can see that we're rejecting value. Excuse me, we're rejecting value of our previous rotation still. We're just following pathing. We just need to see the secondary step in here. That's what gives us our next trade. Low look below, see if we can sustain. Good hold of our POC to value from previous range, 760. Now looking to see if offer is willing to defend. So we have trap liquidity here. We're now watching to see if this now will be defended on this edge. If it does, then I would assume that we would go for that 700. I'm watching to see if we get follow through now. Another full rotation on ES, no change, just chopping. Literally no change. God, I hate afternoons, man. What a waste of time. They gonna slap this shit down or what? 40 seconds till new 15s. It'll be now or never. Into new 15s if we can't hold this and sweep. This is just going to be a trap. And then it's all invalidated in my opinion. Watching. They need to defend and open new 15 ideally. Our value. Our value edge. If we're going to get this continuation. Watch for volatility into the open of this new candle. Holding our 35.40 as of now. Watch for bids at 64s on ES. It's just been continuing to do the same rotation over and over. New 15's opening now. Let's see if they'll defend this. $715 to 700 is your first target on hold from 40s or from 60s, wherever you're looking. Needs to flip below for new lows, or that'll be that. Yes, into 64s, finding that bid, still chopping, no change. I mean, they lose if we can't get back below 35s here. Like, it's over, in my opinion. Yeah, I mean, bid failed. Or sorry, the offer failed at below 35.40. We got a decent move, but as soon as we step back over 35.40 and then we're able to hold it, it's now just a full rotation of this range. With ES holding 64s, it was bound to happen. We don't have full market participation. If 60s flip, then you do your full rotation up, trapping this liquidity at the lows. Watching 50 to 60 now. Russell's still in downtrend, so there's potential still. This could still fade, but we have to be very careful here. And again, we were playing around this trapped liquidity before. You now have this trapped liquidity below. So if we're going to do something new, we need to bid above this liquidity. And again, like ES has just been rotating while NQ is trying to fade. It's just rotating in between these two pivots. We already knew that. We already talked about it. On the 5, right? This is that POC that I was talking about. It's just impossible to do anything until we see that actually start to push down. Okay, so can we get above or not? High taken, very important. Rotation to 780 should be likely. I'd like to see us take highs. If we can't take highs on first attempt, we retest 760, 750. That's your risk, which would make sense.
Sell side still sits there. Nothing's changed about that fact. We just needed to see that, show that an active buyer is now willing to defend this edge. If they're willing to defend, then we're good to go. I think stops probably, you're looking at like 47, probably. Let's see if we can defend the 60 edge for the most bullish push and then pop over that 780, 790 for more. Or if this is it, we want to see a very clear willingness to defend this edge. Looking at our value of this candle right now, 47s to this edge here. Seeing if we can hold this or if this is it. Keeping our one pivot at 35, no change there. Watching to see what we do now that we've tested into our highs again. Again, we've just rotated value. I'm watching to see if we can sustain here. On retest after testing this high. I'd love to see the bid be able to maintain this and then show interest up, trapping all of this liquidity below us now that we've re-entered into value. That's the idea. With ES bouncing 64s once again, understanding that we already knew that it was going to be rotating sideways. Good bid so far at 60s, rotating back up to 80. We need to watch to see if we can get above that last high at 80. We get above that 80, 90, then we're off to the races, upside wise. If this fails again, then it's still balance and there is no real shift yet, which would be really sad. Bro, there's just no follow through. Come on.
Bro, I mean, this is insane. All right, I'm gonna risk off 1 here into 75 for 17 points from our 58, or just into 70s, just to take off a little risk. And then I'm just gonna leave my stop at 47, and then I'm gonna go let my dog out because this is stupid. And if we go to secondary targets, sick. If not, I don't care. Secondary target from 758, I'll be looking for 790 for 40 points, and then 820 for my third target. I can't be bothered. So again, took off first risk here into highs from our hold of our bow low. My stop is sitting at 47. My average is 58. So I have 2 contracts left. I have a target above at 790 and then 820 if we can breach. I've taken off 1. I'm not sitting here for this. I'm gonna go let the dog go out before she pees the house. Here's my average. I'm going to end stream. If we can get this breach, great. Upside feels good. If not, I stop out, and I've covered my stop by my first exit here into our rotation high for 18 points basically. Nothing crazy. And then if we can breach, then I make like $2,000, which would be sick. New 15s in 30 seconds. Remind me to not stay for afternoons because they're miserable. I will see you all tomorrow. This looks okay though. I just don't see the ability to expand until over 790, but if we can do that, then 820 feels very likely. That's my take. I really like this potential trap that we just put in here with our target. New 15s have opened now. Again, just watching to see if we can build here. I like this guy who got ruined here. And then we're holding. We just need to now get above this 790, 780 area for more. If not, right, like we look for that to then flip below and then we play back down. But that would then give you 715. I really want to see this continue to kind of maintain here. If we can do that, then upside feels good. You need ES follow through though. So far opening above where we want. This looks okay. Just need to see acceptance over this, and then we have potential continuation.
According to CNBC, Meta debuts its first AI coding agent called Muse Code.
All right, I don't care. Watch to see what happens here as we push into 770 from our 664 hold. If this fades again, then we don't get breakout on NQ would be my assumption. We want to see full market participation, and ES is oscillating right now. So if we lose momentum here into highs, then it makes sense that we also fade at 780 because it's the same balance, right? The reason why we care is because NQ has the most fuel for a potential squeeze if we can actually build above this and we get follow through on ES and RTY. If we don't get follow through, then nothing has changed. The balance at the highs still remains. We would just come back down to retest these lows. All right, goodbye. I'm out of here. I can't be bothered with this. Not worth it. If we squeeze, then we get to targets. If not, then again, I stop out, break even at this point by taking off 1 into 780. Yeah. All right. Peace.